Alrighty, so now we are finally ready to get stuck into the juice of it. So we're going to obviously start off with market structure. Now, you're probably going to hear me say this a lot, but market structure truly is king. It's the first thing I look at whenever I go onto a chart. It's the first thing I'm thinking about. It's the first thing I'll be looking to analyze. If you get your market structure right, everything else follows on from there. You can literally be profitable with just market structure alone. It's the foundation. You need to get this nailed on. Literally just to make sure you're pretty much always, more times than not, trading on the right side of the market. And that is what market structure is going to allow you to do. So we're going to really dive deep in this module. We're going to make sure that you've got it absolutely nailed down before you kind of start to bring in the other concepts such as supply and demand and liquidity, etc. Because market structure is what matters and everything else is what slots into that. Okay. So, what actually is market structure? Well, essentially all it is the highs and lows in a market, which we then map to essentially, make sense of it all. So kind of want to bring your attention to where we're going to start off in the top left-hand corner. And here we have what we call bullish market structure. In more simple terms, it's an uptrend, okay? So imagine price is moving nice and uniformly to the upside, right? So we get what's called a higher high, which is what I denote here with the HH. So we get a higher high, price then pulls back, okay? And then it starts to move to the upside again. So obviously as we break past that high there, we now have a higher high, which is, again, why we have this annotated here, okay? So we have a higher high. Now, a boss is just simply, it stands for break of structure, okay? And that's what I said. What is structure? Structure is simply just the highs and lows in a market. So in this instance, price initially moved up, it formed a higher high, price then pulled back, and then when we broke this high here, right? So we get a break of structure, a boss, we then form a higher high, okay? Now, it's only at the moment that we get that break of structure. So at this exact moment here, where we break the previous high, the current active high at that moment, it's only when this break of structure happens that we actually know where the higher low is, okay? So the reason why that is because what could have happened, right, is price could have pulled back, it could have started to move up, and then some people, wrongly in my opinion, would label that as the high low, but you don't know that that's the high low just yet, because price could come back down first and break it before then going up, okay? So the previous low is down here. It's only confirmed as the new higher low once we get that break of structure, okay? So then we break that high, we get a boss, and we form a higher high, okay? Price then starts to pull back, okay? And at the moment, this is still the current higher low, okay? It's only once we get what? It's only once we get that next break of structure at that moment where we break the prior high to form a higher high. That's when we can look back and then we know where the high low is, okay? Because this becomes a high low only once we get the break of structure. So then this is no longer the high low, this becomes the high low, okay? So a bullish market is very simply defined as price making higher highs, higher lows, the higher low is confirmed once that break of structure happens, right? And then we get the higher high and again, so on and so forth. And overall, that series of higher highs and higher lows, that whole movement there, that is what we call the bullish trend, okay? That bullish run is made up of a series of higher highs and higher lows. And then the exact same for a downtrend, which is what we call a bearish market structure. It's the exact opposite, right? So we get a series of lower lows, right? And then price pulls back to form a lower high, but we don't know where that lower high is going to be until we actually get that break of structure. That then confirms where the lower high is, okay? So we know where the lower low is when price starts to pull back. We draw our boss line across, and then once price breaks it, then we look back and we see, okay, this is where the lower high is, right? So a bearish market is a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and so on and so forth. And overall, that series of lower lows and lower highs makes up a bearish trend, okay? So that would be if, the market moved in those nice, very simple, straight lines like this, but obviously in reality, it can often be a little bit more complex. So here's a bit more of a slightly realistic example where initially we have, a nice higher high, right? We pull back, and then once we break that high to form a higher high, after that break of structure, we can look back and see that is where the higher low is, okay? Now, bit more realistic in the market, we'll have a bit more complex price action where we'll see price doing all of this, right? And then it pulls down, and it pulls up, and it pulls down, then it pulls up, then it pulls down, and then it finally breaks the high, right? To form a high. Okay, so in this instance, it might be quite easy. Obviously, I've already labeled it, but this is where the higher low is. Okay. The problem is a lot of people in the market, they will label, or they're not sure, right? They go, where is the low? Is it this? Was this the low? Is this a swing low? Is this a swing low? They don't know where exactly it is. So what I kind of should have said as well is, at the moment, we're referring to this as swing structure. Okay, so these are the big swings in the market, the big obvious turning points, right? So for our definition, when we have a bullish market, okay, or in any market, the swing high is the highest point that causes the swing low, and the swing low is the lowest point that causes the swing high. Okay, so in a bullish market, we always know where the swing high is, right? When price starts to give that significant pullback. But once we get that breaker structure over here at this moment, okay, and we want to know what current range are we within, where is our swing low? Well, what is a swing low? A swing low is the lowest point that caused the swing high. So at this moment here, when price breaks the high, okay, at this exact moment, and we look back and we want to know where is the swing low, well, what is it? It's the lowest point that caused the swing high. So this was the swing high, right? After it's broken, we look back, and between that swing high here where it formed and between where it broke, where is the lowest point in this box? It's obviously here, right? So that's why that becomes our swing low. So when we break that high and we form a higher high, that becomes our high and that becomes our low. So then at that moment, between these two orange lines, that is our new current swing range that price is trading within. Okay, this is our swing high, so price can pull back, right? And then that is the swing range we're within. So it can do whatever it wants, right? It can pull all the way down here. But until, as long as this high low stays intact, if price doesn't break it, then we go up and we get that next break of structure, right? That then becomes our new high low there. So yeah, that's literally it. Now the problem is what will happen if I zoom in a little bit into here, is if you don't get your swing structure mapped correctly, you can find yourself on the wrong side of the market. Okay, so what I mean by that is, imagine, right, you were really zoomed into price and you were only looking at this price action that I've circled from within here. Well, then you could be forgiven for thinking, well, price is making lower low, lower high, lower low, right? We pull back up to form that lower high and a lower low, right? If you're only looking at this section of price action. So then you think, okay, well, I want to get short from here, because if it's a bearish market, right, then price should come up into here and it should continue to the downside, because that's what we would expect. But you end up getting smashed, you end up taking loads of losses, and you're sitting, there scratching your head thinking, why am I taking losses here? I thought the trend was bearish. I keep seeming, getting stopped out. And the reason why is because you haven't zoomed out enough to actually see where we are within the true swing structure, okay? Because at this moment, this is your swing high and this is your swing low, okay? Because we are bullish. So all of this that you're trying to sell within here, this is just the internal structure. Everything between the swing high and the current swing low at that time, this is all just internal structure. So all of this can do whatever it wants, right? This whole time it can break highs, it can break lows, but as long as it's between the swing high and the swing low, the market is bullish. The swing trend is bullish, okay? So that's why, although price can be doing this and you could be seeing, this moving to the downside in the middle, you have to understand that the swing trend is bullish overall, okay? And obviously, again, once we get that breaker structure, we look back at the lowest point, that becomes our new high low. And now you're playing within this range. So again, price can pull back and it can do whatever it wants. It can break these lows. It can come down like this. It can start to move to the upside. But until it breaks either the high or the low, right? The market trend is still bullish. The swing trend is still bullish. And the expectation, right, is that we're going to continue to get a higher high, pull back to form that higher low, and continue to get that higher high, okay? So just resize this a little bit. So exact same thing applies for, bearish market structure, where essentially, again, right, we have a lower low, lower high, we break that structure. So at this moment, this becomes the swing high, okay, that orange line, we're within that swing trend, and this becomes our current swing low. So price can do whatever it wants between those orange lines, but at this point, the swing trend is bearish, right, until price breaks that high, okay? Otherwise, we're still bearish, okay? So price can do whatever it wants, and then it's only once we then go on and break that swing low to form a swing lower low, then we can look back and go, where is the new swing high? Well, it's the highest point that took out this low, right, after it was printed, which would be this point here, okay? This is the swing high. So then you draw your new swing range, okay, between these two orange lines, and again, price can do whatever it wants. It can pull back, it can break this high, it can break this high, but it doesn't matter. The swing trend is still bearish, okay, because it has not broken the swing high. So as long as we're trading between the swing high and that swing low, okay, we are still bearish no matter what it does in between. That's all just internal structure. And that's the thing, right? Because people don't have this framework, they'll sometimes see like price break this high. They think, okay, now we're bullish, now we're going to the moon. But no, that's not swing structure. The swing structure is the previous point, highest point that broke the previous swing low. Now you know what new swing range you're within. So whenever you're on the live charts, again, we're going to practice this loads, but we will always map out the current swing range we're within. So we're always aware whether price is bullish or bearish with the swing structure. And therefore we always know that we're expecting at any moment that lower high could form to then come down and form that lower low, okay? Cool. Now, the one thing I probably didn't say, but it is super, super key, and this is gonna seem probably very, very basic at this moment, but I guarantee you, if you can remember this in the live market, like you have to keep reminding yourself every day, it will help you honestly stay out of so many potential losing positions when obviously in the live market things can get a little bit more complex. And all that simply is after a break of structure, we expect a pullback on that time frame. Okay, so everything we're going to be doing so far is all in one time frame for quite a lot of lessons now. We'll do multi-time frame analysis towards the end. So everything for now, just think about one time frame. Okay, so after a break of structure, we expect a pullback on that time frame. So what does that mean? Well, after we break that high and we form a higher high, or we break that high, price can go for quite a while. But at the moment we get that break of structure, you have to start thinking about at any moment that swing pullback could be kicking in. Okay? So again, once we get that break of structure here, yes, it could keep going for a while and you could keep buying, but you need to be a lot more like quicker with your targets because at any moment after that break of structure, we're expecting that pullback, okay? And again, this is where a lot of people go wrong in their trading because they see that break of structure and they go, oh, now we're strong, now we're breaking highs, now we're going to the moon and they keep buying. Then what happens? Then price pulls back because we expect the swing pullback, they don't, and they get stopped out or their profits go away, okay? So where we want to be buying is we want to be buying here. We want to be trying to catch these high lows and we want to be targeting these highs. And that's when we want to then be taking profits, then waiting for the pullback. We can also trade the pullback as well, but wait for that. Then we want to be catching this and we want to be targeting here. Again, taking nearly or if not all of our profits and then waiting for the pullback. Whereas losing traders, they're waiting for the break, then they're buying up here and then they're always getting stopped out or not making a lot of returns, okay? So super, super key. After a break of structure, that's when your mind needs to start thinking and saying to yourself, okay, at some point now, we've had a break of structure on this time frame, we can expect a swing pullback on said time frame. Now, we're going to look at basically the exact same thing, but we're just going to add in a concept of what we call strong and weak highs and lows. Now, this is what I think is a reasonably simple concept, but it is so underratedly powerful that I could almost go out on a limb here and say that the entire strategy that we use is pretty much based on this concept. And what we essentially want to be doing is we want to be trading from strong structure and we want to be targeting weak structure. Okay? And that is literally it. If I could boil down the strategy into the most simple philosophy behind it, is we want to be trading from strong structure, okay? And we want to be targeting weak structure. Okay, so let's go through that and you'll see exactly what I mean. So remember, nice simple bullish market, we get a series of higher highs and higher lows when we break that structure, right? Higher high, higher low, higher high, higher low, higher high. Now, the way to think about this in a bullish market is that when price pulls back like this and then price goes up and breaks it, it takes a fair amount of money to break these key structural points in the market, right? Because there's going to be, people who have sold here. There's going to be people who, are going to want to, protect their position. So, an even more simple way to think about it is what is a high or a low's job? Well, a low's job, so a low, its job is to try and make a new high, okay? And then you could say a high's job over here is to try and make a new low. So a high is always trying to make a high is always trying to make a low, and a low is always trying to make a high, right? So if this low goes on to make that higher high, right, it takes a lot of money to break structure to the upside. So now this becomes a strong low, which is what we use with this solid line, okay? So when price comes back down to it, you can kind of think about this becomes a protected low. So we can use the words strong and protected. They mean the same thing, okay? And the reason why you might want to call it protected, if this kind of helps you understand it, is you could go, well, big money stepped in to move the market to the upside, right? To break these highs. So as price is coming back down, you could think that there's a vested interest to want to protect this low. They're not going to want price to come down and break past it, right? Because then obviously they're going to lose money or lose their profits. So If a low breaks structure, it becomes a strong low. So when price is pulling back, the expectation is that strong low will not be broken, okay? And then that's why then price moves to the upside again. This low holds, right? And then we get another strong high low, right? Because that low breaks structure, right? So that's why in a bullish market, you continue to see each strong low hold and it doesn't break. Price pulls back near it, but as long as it holds, it's still a strong low and it moves to the upside, okay? So in a bullish market, you have strong lows, and that's why we want to be buying from the strong higher lows, okay? And that's why I was saying the whole idea of the strategy is we want to be catching these movements. We want to be trading from these strong lows, okay? So as price is pulling back and we're in this current swing range, and we know that this is the strong low because it broke the high, it broke structure, right? All the strong lower high is it's one if it broke structure. That's a more simple definition. So a strong low is strong if it breaks structure. So when price is in this swing range and price is coming back, we know we want to be buying as price is coming near this low because there is a high probability, not guarantee, but high probability that this low will be protected and price is going to want to continue to the upside, okay? So what is the other side of that? Well, why do we have these dotted lines here? Well, in a bullish market, the highs are weak. Well, why are they weak? Well, if you think about it, what is its job? It's only strong if it breaks structure. But as price is moving back, right, this high, we're not, the expectation is that this low is going to hold and it's not going to break. So this is a weak high. So as price is coming up to it, right, and we can see that it hasn't broken any structure, the expectation is that it will break. Again, same price pulls back, but it fails to break the low, right? This high here does not break this low. So it's a weak high. So we expect what? We expect it to break. We expect in a bullish market that the strong lows will hold and the weak highs will be targeted, okay? And again, that's what the whole philosophy is. The expectation is that strong structure will hold and weak structure will be broken. It will be targeted. And that's why in a bullish market, we see these strong lows hold, weak target the weak high, right? We pull back in this swing range, we expect the strong low to hold, target the weak high. Okay, but now we're in this new swing range, right? We expect this low to hold, price should pull back, but it won't break it. And then we can now get long, try and get long and target the weak high. Okay, so on and so forth. And it's the exact opposite for bearish structure, right? We pull back, we come down. Now this high breaks this low, so it's a strong high. So we're now currently in this range, right? Price is pulling back. The expectation is, right, that in a bearish market, what do we expect? We expect price to keep making lower highs. So if this is the current high, what's the expectation? The expectation is price will not break it because we're expecting a lower high to form. And also because it's a strong structure. Why is it strong? It's strong because it broke this low. It caused a break of structure. That's why it's a strong high, okay? It's a high that caused a low, right? And that's why in a bearish market, those strong structure is protected. It doesn't break. And we see that series of lower lows and lower highs, right? And the lows are weak because they don't break any structure to the upside. So that's why they keep being targeted and we protect the highs. And that's kind of as simple as it needs to be, but it's a super, super powerful concept when you combine it with everything we're going to use. So again, higher highs, higher lows, we break that high. This is the new current swing range. So price can do whatever it wants in between, right? Remember, but we just expect that this strong low is going to be protected because it broke structure. So we know there's a lot of money that has a vested interest, let's say, to keep this low protected. So price can come all the way down. It can literally have a double bottom, but as long as it doesn't break it, then the structure is still bullish. This low is still strong, it's still intact, and this high is weak because it hasn't broken anything. So now we can try and look to catch this new high low to target what? Target the weak structure. We always want to be buying from strong lows and we want to be targeting weak highs. Same thing from here, right? If it's bearish, we want to be selling from the strong high, right? So we want to be trying to catch this move. We want to be selling near this strong high. And what do we want to target? We want to target this weak low here. Why is this low weak? Well, it failed to break structure. It didn't break any structure to the upside. So we want to trade from, i.e. sell from strong structure, and we want to target the weak structure. Okay, hopefully I've kind of made my point nice and clear here, but watch it as many times as you need, and hopefully it will become as clear with time. So, like I said, right, strong low is a low that causes a high. So this is a strong low because it breaks structure. It causes a high. So that's why price doesn't break it. Of course, sometimes it will. We'll get onto that in a minute. But the expectation, it's a framework that we use, okay, to help us with probabilities in the market. That's how you have to think about it. And a strong high is the opposite. A strong high is a high that causes a low. So again, if you want to keep it nice and simple in your head, strong structure is highs or lows that break structure, okay? It needs to have broken structure for it to be strong structure. And if it hasn't broken anything, then it's weak, okay? Because it failed to break structure. Now, typically in the market, we will see these swing highs and lows, the strong ones, right? They're usually formed with a sharp move away. So typically what you'll see is price will move down and then be kind of slow and corrective. And then usually where the big money steps in, you usually see quite a sharp and obvious move, okay? Doesn't have to be a rule, it's just something you typically notice, okay? So it can be quite easy to see in the eye. So again, this is kind of the strategy, right? Our goal is to catch higher lows. Why do we want to catch higher lows? Well, in a bullish market, the higher lows are the strong structure. This is what we're trying to buy, okay? They're going to be the highest probability moves because we're trading with the trend. We're buying from strong structure here and we're targeting the weak structure. So that's why our goal is to catch higher lows. And then our other goal is to catch the lower highs, right? Because these are the lower highs. We're selling the strong structure and we're targeting the weak structure. So all that line means is we're following the trend and we're trading from strong structure and we're targeting weak structure, okay? Cool. So the final kind of, I guess, key little lesson we want to do here with the basic market structure lesson is look at trend changes, because obviously so far all we looked at was just bullish market structure on its own, and then we looked at bearish market structure on its own. Now, if you trade Forex, which you probably most likely are going to be, the market doesn't tend to trend in just one direction for a very, very long time, like sometimes it can do in, say, equities, stocks, right? Or potentially even the crypto market. We tend to get a lot more trend changes and a lot more sort of overall bigger ranges, okay? So very, very simple concept, but you know, there's some nice mechanical frameworks to think about this, especially when the market gets a little bit more complex. So you have to really make sure you nail it down now, okay? So we have a bullish market initially. Why is it bullish? Well, price is making a series of higher highs and higher lows. So we get the higher high, price pulls back, okay? It's only once we get the break of structure that we can then look back and know where the higher low is, right? So then this becomes our new swing range. Then we start to pull back, so we know that this is our higher high, and then we can draw from the high across, and we draw from the low across, and then between these two orange lines, we know that this is our swing range, okay? So what do we expect at this moment when price is pulling back? Well, we're not surprised that price is pulling back, because again, remember another rule. When we get a break of structure, what do we expect? We expect a pullback on this time frame. So after that break of structure, price starts to pull back. We can then label that as our higher high, right, as price pulls back. But what are we expecting? Well, we know that we have a strong low here. Why is this a strong low? It's a strong low because it broke structure, okay? So the expectation is that price will pull back, but it won't break this low, right? Because it's a strong low, and we're expecting at some point the new higher low is going to form and break this high to form a higher high, right? And that's essentially what the frameworks that we're using so far, right, to trade that bullish market. Higher highs, higher lows with weak highs and strong lows, right? Again, pull back and break structure to the upside, okay? So after a break of structure, what do you expect? We expect that swing pullback on that time frame, okay? Now, at this moment where the orange line is, what would be the expectation? Because obviously we wouldn't be able to see in the future if we were looking at the live market. What would we be expecting? Well, this was a strong low because it broke structure. It formed a higher high. So the expectation would be that this low is strong. It's not going to break and price will not trade below here. That would be the expectation. But obviously the trend is not just going to go in one direction forever. At some point that trend may change. So if price then comes down and breaks the strong low to form a lower low, now we have a bearish trend change, a shift in market structure from bullish, right, now to bearish, because we now have a lower low, right? The series of higher lows has now been broken to form a lower low. So for me, and what I would recommend, how we use it in Photon, is the moment we get that first break of structure in the opposite direction, that is a confirmed trend change. So the moment we get that bearish boss there, that bearish break of structure, at this moment I've circled, and where we have this dashed line, the trend on this time frame is now confirmed bearish, okay? And that is as simple as I want you to keep it for trend changes, okay? But what I'm gonna just add in here, just for your sort of knowledge, is that there are a lot of people in sort of the trading industry that at this moment, they wouldn't confirm the trend as bearish because they don't just want a lower low like we do, they also want to see the lower high. So they want both the lower low and the lower high, okay? Now, the reason why that is because sometimes what can happen in the market is price can have a bearish break of structure, but it's just to grab the liquidity that's behind this low. And don't worry, we'll get into this in later lessons. And then sometimes what can happen is then price can continue the overall bullish trend. So sometimes if you only use one break of structure, you can get a bit of a fake signal, okay? But don't worry about that. You'll have plenty of confidence to spot that in advance, okay? So those people want to see the lower high as well to have the confirmed trend change. Now, obviously, if you need that, we don't know where that lower high is until what? remember, until we get a break of structure, because it's only once we get the break of structure here that we can look back and know where that lower high is. Okay, why is that? Well, price could have pulled back like this, right? It could have started coming down. There's no break of structure yet, but you can't label that as a lower high. Why? Well, because price could come back up, break that, and then we get the break of structure. And now this is where the high is, not here. And that's why you have to wait in a bearish market. You have to wait for the break of structure to know where the lower high is, okay? So for those people who need to see both a lower low and the lower high to confirm their trend change, what does that mean they need? That means they need a double break of structure, okay? I just thought it would be worth to talk through that in case some of you are wondering. But for us, we keep it very, very simple. I find it to be more than what we need, is that as soon as we get that first break of structure, that shift in structure from bullish here to bearish at this exact moment here where the dash line is, we are now confirmed bearish on this time frame, okay? So keep it nice and simple. Now, going back to strong and weak structure, before the expectation was that that strong high low was going to hold. It was strong because it led to a break of structure, right? But price came down and broke it. Now, it takes a ton of money to break strong structure, okay? So now what happens is initially we thought this high was going to be weak when it was pulling back, but because it went on to actually break structure, now this becomes a strong high because it took out a strong low. So it becomes protected, right? Protected is just another word for strong. It means the same thing, right, in this instance. So now when we get that lower low, what do we expect? Well, this is our new range between this swing low and we can draw on our new swing high. So we're trading between these orange lines. We're now bearish. Yes, after a break of structure, we expect that pullback, but how far is price going to go? Well, we never know, but our expectation is that it will not trade higher than the current swing high, right? Why? Because it's a strong and protected high. And that's why price will pull back and we're looking to catch that lower high, but we do not expect it to trade higher than this high. And we're expecting it to come down and take out the weak low to form a lower low. Okay. And if you can get your head around these concepts of what we've spoken about so far, you are literally 70% of the way there. And everything will be so much easier if you just keep remembering this is the framework that we use for literally nearly everything. Of course, we're going to layer in more concepts here. There's going to be more complex scenarios, but it's all about using this mechanical framework for structure and reminding yourself or knowing how to identify where is my weak structure, where is my strong structure, where is my current swing high, my current swing low, right? And then that will tell you, are we bullish or bearish? And you go, okay, well, at this moment, we've had a break of structure. What do we expect? We expect a swing pullback. My current swing high is up here. My current swing low is here. So I know we're bearish. This is strong. This is weak. So what do I ideally want to be doing? Ideally, I want to be looking for the shorts, right? To trade down and target that weak low. And that is literally trading in a nutshell. Or high probability trading, I would argue. So we continue that trend, right? We pull back. We're within this trend. We don't breach that high. And then we push down, we get a break of structure and we form a lower low. So now we have a strong high, right? And now we're trading between this range. So at this point, when we're pulling back, what's the expectation? The expectation is that this strong high will hold, but the bearish trend isn't always going to last forever, is it? So at some point we are going to switch bullish, just get rid of these lines, and we break structure to the upside. We break the strong lower high to form a higher high. So this low took out the strong high. So now it becomes a strong low, a strong protected low, okay? What do we expect after the break of structure? We expect a swing pull back on that time frame. How far will price pull back? We never know, but we expect it. The framework we use is that this low will not break, right? I'm sure you're getting the hang of it now. So we expect price to pull back, but not to break this low. And then we can look to target that weak high to form a higher high, right? So hopefully that is nice and clear. As always, please watch all of these lessons at least 3 times, ideally in a row. Just to make sure you've got it really nailed down. Now, I do appreciate we've just kind of done the theory so far with just line graphs. Line graphs are not what we're going to be trading in the real market, but we will go through tons and tons of real examples in the upcoming lessons, just to really make sure we have this nailed in. So before we're going to jump on the charts and actually look at, applying the frameworks that we've been learning so far to real price action examples, we kind of just need to go over a little bit of more theory first. So in the previous lesson, the frameworks that you were learning, we were pretty much just thinking about that in terms of what we call swing structure. So looking at those big, obvious swings in the market. Okay. And again, another thing I keep wanting to remind you is that so far, all we are going to be thinking about is just one time frame alone. Okay, we will come on to multi-time frame analysis. That will be a little bit later on in the module. But for now, we need to completely understand and master all of these concepts on just one time frame first. Okay, so essentially, the way we view structure is by three main types, which, as you can probably see here, what we call swing, internal, and fractal. Okay. Now, over the course of the next few lessons, we're going to look at each of those individually, so you completely understand, what they are, how we define them, how we map them, and what they mean, and then how we put those all together, all three of them together, to give us our systematic framework in what we use to obviously trade and make trading decisions. Okay. So what we're about to go through is going to be a little bit complicated, probably for a lot of you, especially if you're new to trading or new to trading in this style. But that's okay. Do not be overwhelmed or, feel a little bit unmotivated if this feels like a little bit too much at this point as we go through it. It's kind of supposed to, but kind of as I was trying to plan these lessons and think what would be the best way to teach this, I think it does make sense for you guys to at least get some exposure of what it is we're trying to do with these three types of structure. Then we'll go and study them individually in depth. And then again, we'll bring them all back together at the end. And we'll go through this in a lot more detail. But I do just think it makes sense to kind of run through this initially, so your brain can start to think of what it is we're actually trying to do here. So I'm going to go through it now. But if you start to feel a little bit overwhelmed and if you feel like there's too many variables to kind of try and think of at once, trust me, do not worry, because we're going to study each of them individually and really take our time with this, okay? So if you have hopefully watched the first lesson at least 3 times, you should hopefully be very clear with how we look for a bullish market structure or bearish market structure, right? A series of higher highs and higher lows. You should be very comfortable with what strong and weak structure is, right? We want to buy from strong structure and target those weak highs, right? And yeah, that's pretty much kind of the main thing we need to think of for now. So if you think about, right, I'm going to draw this with the orange line, these big swings in price action, right? Again, we'll get onto this in the future lessons, but those big significant swings in price action is what we are going to refer to as swing structure. So in this instance, this is that big swing pullback, right? We get that break of structure. And then this whole orange leg I'm drawing, that is one piece of swing structure, okay? So at that point, this is the swing low. And then as we start to pull back, we know that this is our swing high, okay? So then I'm going to draw the swing structure again. This is all just one big swing pullback, okay? And then we go on to break the swing high to make a higher high. So that orange line I've drawn there, that's basically what we think about when we think about swing structure. And obviously, as you can see in this example, and as it will very often but not always happen in a live market, is we will get lots of structure in between that, right? In between the current active swing high and the current active swing low. Okay, so this again is the big swing structure, right? That big higher high, pull back to form that higher low, and that movement to go for the high high. But that big piece of swing structure can sometimes be made up of little pieces of structure in between, and sometimes it can look messy and complex. And that's where the other two types of structure come within, internal and fractal, okay? And we're going to use those to help us make sense of it all, as you'll see, and as we go through, okay? They all have their own purpose, and they all have their own mechanical definition of the way that we map them and define them. And then also you'll see like how we use them to put it all together to give us signals and confirmation of what we expect to happen next, okay? Bit of a mouthful, bit of a long sentence, but let's slowly go through it and it will all hopefully start to make sense, okay? So step by step. We have a big bullish swing leg to the upside, okay? Price forms that higher high. Then we start to pull back, okay? So we know that in a bullish market, price will pull back and we would expect that swing low to be strong and to hold. So price will pull back, but it won't breach it. Then we get the next swing movement to the upside, okay? Now, after a break of structure, what do we expect? We expect a swing pullback, okay? So as price comes up, right, sometimes you can have a little bit of a pause and just a little bit of a pullback, right? And then price can continue to the upside. So these little kind of small movements, right, we don't want to classify that as swing structure because we want it to be a big, like obvious and significant pullback for us to deem it swing structure, right? This is just a little pause in the market and then price continues up. So I would view this, right? We view this as just one big push to the upside that can have small pullbacks. And in between it. So at this point, I would just call that an internal pullback, right? So you can see it, like you don't have to zoom right in. It's kind of an obvious movement, but it's not as big as like a big obvious swing price movement, okay? Then price can come up, and then sometimes you'll get like a pause of like say one candle, maybe two candles, where it literally just kind of pauses and pulls back and then continues up, right? And that is what we will call fractal structure. So hopefully you're starting to see it really swing is like your big structure, right? So these big movements in price, okay? Your internal is where you get a pullback that you can kind of visually see, right? It looks like a pullback, it is a pullback, but it's just not quite as big as swing structure, right? Relative to the recent price action, it's not the same, okay? It's not as big, it's not as significant. It's just a little pause in price action, right? And then you move up, and then sometimes you get these super, super tiny movements where it's literally like one or two candles that pulls back, and then we continue up. And that's what we're gonna call fractal structure, okay? And what we have found is if you separate your market structure mapping, your framework, into these three separate pieces of structure, you just have such an amazing and deep understanding of price action that it really allows you to trade the market with such accuracy. Anyway, I don't want to kind of hype it up, but you'll see as we get into it, really just how powerful this is when you really understand it and nail it. But if I could kind of keep it super simple for what the three differences are, is swing is your big obvious swings in price action. Your internal is where you can see a pullback. It looks like a movement in price, but it's just not as big as the swings relative to the recent price action. And then the fractal price action, which we'll get onto in a bit, it's literally just like when you get one or two candles that pulls back. But don't worry, we have very mechanical ways of defining that, which we'll see in a bit. Okay, so for now, just whilst we go through it, just kind of think of it as like your big swing structure, kind of your medium internal, and then your super small fractal. Okay, so bullish market, swing higher high, we pull back to form that swing higher low. We get that break of structure, so we're expecting a swing pullback at any moment. Okay, so we get a bit of an internal pullback, but it's not a swing pullback, and we continue to the upside. We get a little bit of a pause, so just a bit of fractal structure, and we continue up. Okay. Now, when price first comes down and we break that fractal low to form a fractal lower low, this is what we call a chock, okay? So a chock, it's a bit of a fancy name, but it stands for change of character, okay? Character. So it just means kind of price is bullish, and it's that first little indication that price is starting to show weakness because it breaks a low, right, in this instance. But it's just a little fractal low. It's just what we call a chock, just a little change of character, okay? So when this happens and you get that tiny little bit of structure breaking, at this moment, right, all a chock signals is a internal pullback, okay? So into the internal structure is this movement here, right? So this is your internal low, that was your internal high, and then we formed an internal higher high. So if we get a change of character here, where we get that bearish chock, all that signals at that moment, or my expectation would be, because this is our strong internal low, right? This would be the internal range we're trading within at this moment. If we get a bearish chock, all I'm expecting at this moment is just an internal pullback, okay? So this internal low could hold, right? And we could continue up, and we could continue that overall swing leg, right? So a change of character is just where literally you have like one or two candles that pauses in price. It's like the tiniest movement, and then price may come down and break it. So at that moment, am I expecting we're gonna get the swing pullback? Well, we have had a break of structure, so I'm aware that it can happen at any moment. But when we get the little change of character, that is, for me, it's not the confirmation that the swing pullback has started, okay? A change of character, so basically just a fractal, the fractal change of trend there, the fractal structure, when that happens, all my expectation at the moment is that we're just getting the internal pullback into this internal strong low, okay? That's all that gives confirmation for. So a chock, which is the fractal break of structure, right? That just signals an internal pullback, okay? It's only when we get the internal boss, so the I boss, right? Where the internal, that medium-sized structure, right, shifts bearish at that moment, that's when we have true confirmation that the swing structure is pulling back, okay? Appreciate, again, this is a lot to think about, but essentially we have the three types of structure: the big swing structure, sort of your medium internal structure, right? And your tiny fractal structure. A change of character is when the fractal structure shifts from bullish to bearish, right? Or bearish to bullish. It's basically a fractal trend change. When we get that, that's just the first signal that we're getting just an internal pullback, right? We don't know that this internal low is going to break because we expect it to be a strong low because it took out the strong internal high. Sorry, it took out the internal high, right? So that chock just signals the internal pullback. But in this instance, it goes on to break the internal lows. So we get a bearish IBOS, an internal break of structure. So at this moment, the internal structure is now bearish, okay? So once we get that IBOS, now we have the signal of the swing pullback, okay? So CHOC signals the start and end of the internal pullback, and the IBOS signals the start and end of the swing pullback, okay? So we get the CHOC, so we start the internal pullback, but it ends up breaking the internal higher low, so we get an internal break of structure. So now at this moment, right, this is the internal range we're trading between, right? This orange line and this orange line here, because this is the internal low and this is the internal strong high, right? That's a strong internal high because it broke the internal low, okay? So now the internal trend is bearish, the internal structure. So the internal structure has shifted bearish. Why? What is the objective of the internal structure? Well, the objective of the internal structure is to facilitate the swing pullback, okay? So the internal structure has shifted bearish to give us our swing structure. So now essentially what we can do is we can look to trade this internal structure, right? Look to try and catch these internal lower highs and target what? Target the weak internal lows, right? And we can trade this, and what do we expect? We expect this internal trend to keep continuing, right? These strong internal highs to hold and continue to the downside, right? But whilst the internal trend is bearish, you have to remember the whole time that the swing trend is what? The swing trend is still bullish, right? Because this is the swing trend, and that's one big leg up, right? And the internal trend has just shifted bearish to facilitate what? That swing pullback, okay? So whilst this is bearish, and yes, we can look to trade this, you have to be aware that at any moment, what could happen? The swing high low could start to form, right? Because this is a strong swing low, remember? We don't expect this swing low to break. So at any time, that swing high low could form, right? And then we could go on to target that weak high. So when we get that next bearish internal break of structure, right, and we come down, we get a little fractal pullback, a tiny little fractal pullback, and then we push down. So that's one internal leg. We're now trading between this internal low, right, and this internal high. Now, as price comes up and gives us a bullish CHOC, a bullish change of character, what does that signal to us? What does that confirm? Remember, a CHOC just confirms at the start and end of like the internal pullback. So at this moment, when we get a CHOC, yes, the swing high low could be forming, right? And we could be getting that movement, but we don't have confirmation of that with just a CHOC. Because remember, a CHOC only signals the start and end of the internal pullback, okay? So yes, there is the potential the high low could be starting, but we only get confirmation of the start and end of a swing pullback if there is a what? A bullish IBOS. We need the internal structure to shift to signal that the start and end of the swing pullback is happening, okay? So when we get that CHOC here, all our expectation is at minimum, we're getting an internal pullback, right? And potentially this strong internal high is going to hold, which is what ends up happening, okay? So when we come up here and then we get a bearish change of character, right? Which is the fractal structure shifting from bullish to bearish. We get a bearish CHOC. What does the CHOC signal? The CHOC signals the start and end of the internal pullback, right? So now that internal pullback has happened, we've come into the strong high, which is where we expect a new internal lower high to form. We get the bearish change of character, right? So the small fractal structure shifts bearish. Now the small fractal structure has realigned itself with the bearish internal structure. So now what do we expect? Now we expect price to take out the weak internal low because it's obviously failed to break the high. So the low is still weak. So now we can look for another internal leg to the downside, okay? Again, price comes down, the internal structure is bearish. Let me get rid of these lines. So now we are trading between this internal low and this internal high, right? So the expectation is potentially that this internal structure will keep staying bearish. But remember, what is the swing structure doing? Well, the swing structure is still bullish, right? This is the swing high and this is the swing low, and we're coming right into the strong low now. So yes, there's a possibility that it could break, but the expectation is that it won't. The expectation is that it's a strong swing high, swing low, right? So as we get that pullback and we're coming nearer into here, there's a higher probability now that the new swing high low is going to form and the internal structure may shift bullish, right? The nearer we get into this strong swing low, the higher the probability that the internal trend, right? This is orange structure here. The higher the probability that this is going to shift bullish because this swing low has to hold, right? And the idea is that the internal structure only shifted bearish to facilitate this swing pullback. So as we come into this strong low, let's go with these lines, and we get that bullish CHOC, yes, potentially now, we can start to think that that swing high low is in place, but we don't get true confirmation that that is happening until we get that IBOS here, because we need the internal structure to realign itself bullish with the bullish swing structure. So when we get this CHOC in here, we can get long and we can anticipate we're going to get that move, But at this moment, our expectation can only be that we're getting an internal pullback up into this high. But once we get that bullish IBOS, okay, now we have that true confirmation that this swing pullback has now finished, okay? Because the internal structure is now bullish. The internal structure has now realigned itself with the bullish swing structure. And now everything is aligned for us to target the weak swing high. So when that happens, now the expectation is that the internal structure will stay bullish until this high is taken out, okay? And that is super, super powerful. We're gonna keep going over this again and again through the future lessons, okay? But once you have the swing pullback and the swing trend is bullish, once you get that bullish IBOS, now the expectation is that internal trend, that bullish internal trend, we expect it will stay bullish until it takes out the weak swing high. Okay, and that's a very simple, mechanical, but powerful framework that helps us make trading decisions. So what does that mean? Well, it means that we expect this to happen. The internal the internal trend is going to keep staying bullish. Why? Well, this is now a strong internal low because what did it do? It took out a strong high, right? So this becomes a strong low now. So when price is coming back down, what do we expect? Well, we expect this internal low to hold. We expect price won't break it. So we form an internal high. Price breaks the high, so now we have a strong low here, right? So price falls back, it doesn't break it. We get another breaker structure. Now we have another strong low, okay? And that's what all the bullish market means, is it the strong lows are the higher lows now, right? So again, let me kind of keep it a little bit more simple. Again, this will be, I appreciate this will be a lot to take in, a lot of variables. I know we haven't even gone on the live charts just yet. So do not worry if this is overwhelming. Do not worry if a lot of this is confusing. It's good to just get some exposure to this now, and then we're going to go down and literally break each of these three parts completely individually. We'll study them, you'll get to know them really well, and then we'll put them back together, okay? But I do think it will be valuable just to have an idea of what it is we are trying to do here, okay? So we have our big swing structure, right? We get a breaker swing structure. So at the moment we get that breaker swing structure, we have to start thinking in the back of our minds, okay, at some point that swing pullback is going to kick in. Okay, so what signal do we need for the market to see to tell us that the swing pullback is starting? Well, for swing structure, we need to see an internal breaker structure to signal, internal trend change, right? That IBOS, that bearish IBOS, to signal the start of the swing pullback. Okay, so here we get a bit of a pullback, but it's not swing structure, right? It's just internal structure because it's not that big. Again, we continue up, we get a tiny pause in price action, which is just a fractal, but a structure, right? So all of this is just one swing leg, right? That's one big impulsive swing movement up. Price then gives us a bearish chock. So the fractal structure shifts from bullish to bearish. But remember, all a chock signals is an internal pullback, right? So this is the internal structure here. So that chock just signals an internal pullback. So at this point, where the orange line is, as price is coming down, my expectation will be that this internal high-low should hold from an internal structure perspective. It goes on to fail, and it's at this moment where we get the bearish IBOS. Now the internal structure has shifted bearish, so now the swing pullback is starting, okay? It's the IBOS, the bearish IBOS that confirms the swing pullback, and it's the bearish chock that confirms the internal pullback. Okay, so the chock is the first little aggressive signal, but this does not tell us that price is going to have the swing pullback. It's only when we get this that we get the confirmation of the swing pullback, okay? And then we can look to trade this bearish internal structure to the downside, but we have to be aggressive with our targets, and we have to understand that it is against the swing trend, okay? So trading against the swing trend is never going to be as high a probability as trading with the swing trend, okay? So we have to, manage our expectations of how far we think price is going to pull back. Okay, so it continues to move down, right? The internal structure. Now, the nearer we get into that strong the strong swing low, right? The higher the probability that that next swing leg is going to start to the upside, right? So when we get that bullish chock initially here, remember that does not signal or confirm to us that that swing high low is starting to form. We need a bullish IBOS, right? We need the internal high to break. The chock, this bullish chock, just signals to us that the internal pullback has started, okay? So as we come into the strong internal high, and then we get a bearish chock, and the fractal structure realigns back bearish with the internal structure, now that signals price is ready to target this low. The internal pullback is finished because we get the bearish chock. Now we can target this low, okay? Get rid of some of these lines. All right, and then we come in, bullish chock again. So yes, potentially we can start to think that that swing high low is in place, but remember, a chock only signals the internal pullback is starting. Now in this case, we do get the bullish IBOS. So now the internal structure, so this structure here, I'll draw it on, this is the internal structure. All right, Now that's shifted bullish at this moment here. Now we have structural alignment because the internal structure has realigned itself with the swing structure, right? So now we have basically now we have the confirmation that we can expect price to want to take out this swing high because that signals the end of the swing pullback. The bullish eyeball signals the end of the swing pullback. So now what do we expect? Now we expect the internal trend to stay bullish, right? Until it takes out the swing high. So now buying these internal high lows becomes a lot higher probability, okay? So in this entire sequence, the highest probable area to buy, if this happens, it's not always going to perfectly happen like this, but the highest probable area, right, if we wanted to get long, would be to wait for this bullish eye boss here. Why? Well, that signals the end of the swing pullback, doesn't it? Okay, so now we have true structural alignment. The internal structure is aligned with the swing structure. And now when price comes back down, what do we have? We have a strong internal low to buy from. We understand this should be protected, that price shouldn't trade any lower than this line, the low. So as price comes into here, we can look for buy straight away. But what can help us is we can wait for a bullish chalk, right? Because obviously the internal structure is pulling back. So we can wait for what? We can wait for the fractal structure to then break bullish, right? Those little pieces of price action. When we get that bullish change of character, what does that signal? That signals the end of this internal pullback. So now as price comes back in, right? Now we can buy this level here because we have everything aligned. The fractal structure has shifted bullish. It's now in line with the bullish internal structure, which is in line with the bullish swing structure. And this is when we have all of the stars aligned now to target at minimum this week high, so we can take profits here. But ultimately, we expect all of these bullish internal ranges to hold until we take out that high. Okay? And that's it. And you see how this comes back to always looking for where is the strong structure and where is the weak structure. And we want to be trading from the strong structure to the weak structure. Okay, but obviously there's different pieces of structure and you have to lay them together as we get into it, okay? But don't worry if some of it's overwhelming, again, we will break this down, okay? But what I will say is these are in the order of importance. So swing structure is the strongest, it's the most important, it always will be the most powerful. Then your internal structure will be the next layer, right? And that's gonna overpower fractal, which is obviously gonna be the weakest, okay? So fractal, when that changes trend, when the fractal structure changes trend, when you get those little changes of character, those chocks, that just signals we're getting an internal pullback, okay? Once we get the internal structure changing trend, so we get an IBOS, that signals the swing pullback. So you see how it feeds itself in that direction, all right? Fractal has to churn first, then the internal will turn, and then that will signal what the swing's doing, okay? But swing structure is king. So why is that important? Well, at this moment, when you have, yes, the internal trend bearish, yes, we can keep trading the short, but why did the internal trend shift bearish? It shifted bearish just to facilitate the swing pullback, right? It just did that. So as that swing pullback is pulled right down into that strong low, the probabilities of this continuing bearish, the internal trend, is now very, very low. And the probability of it shifting bullish, right, is becoming higher. So that's what we have to be aware of. And then once we do get it bullish, right, now it's high probability to keep buying to target the next swing higher high, okay? So I'll leave that there. We're gonna cover this again anyway in the later lessons, but I just think it would be super useful to kind of have this now. I would still recommend watching this a few times, but in the next lessons now, we're gonna break these down individually, right? We're gonna look at fractal on its own, we're gonna look at swing on its own, and then we're gonna look at internal on its own, and then we're gonna slowly bring them together. And you'll really see how the pieces of the puzzle become super, super powerful in the live market, okay? So please watch this as many times as you need, and eventually the penny will drop. So far, we have only really looked at sort of, line diagram annotations of what we're trying to do here, but obviously we're not going to be trading line charts in the markets. We're going to be using candlestick charts. So how do we actually map structure, and more specifically structure breaks, on our candlestick charts? And this is how we do it. So at this point, don't worry if you don't know the exact differences between swing, internal, and fractal and all that fun stuff. We're going to get into it. But essentially, what we need to remember is we always use this type, candle body closure, for structure breaks for basically everything. And anytime we use wick breaks is for fractal structure when we're looking at change of character, okay? So this will become very clear in the following lessons, but just thought it'd be good to cover this now. So whenever you draw your highs or lows in the market and where you draw your structure from, we always draw it on the wicks of the candles, so on the exact high or the exact low of a candle, okay? You will always do that no matter what. The only difference is what we look for to confirm a break of that higher low, okay? So this is when we look for a candle body close. So you would draw your high, let's say from this wick, and you're waiting for price to actually close above that line, above that high, okay? So here you can see price try to go up. So at some point, this candle here, when it was still printing, it would have looked like this. But this is why if you need to see a candle body close, you need to wait for that candle body or that candle to finish printing, okay? You cannot draw this across and say that we've had a break of structure, right, until you wait for the candle to close and you can confirm that you've actually had that candle body closure there, okay? So candle body close is a little bit more conservative, at least relevant to a wick break, okay? Because, you know, it takes a lot more money to actually cause price to close above a key structural level. So what that will mean is in this instance, right, price wicks the high, but it fails to close above. So at that point, that is not a break. And therefore, this does not become a low, right? Because it has not caused a new high. It has not caused a break of structure. Then when price pulls back a little bit deeper and then we close above, right? And then that's how we actually get that true break of structure. So then when we look over here and we look at fractal structure, this is where with fractal structure, we want to be a lot more aggressive. As you'll see, the reasons why as we go through the lessons. And it's the exact same way in terms of we always map the highs and lows from the actual high, from the wick. But the difference being is a break of structure can just be a wick break, okay? So imagine you're in a market and then, you know, price pulls back, you label this as your high, you can draw your line across. The exact moment that price trades past that high by 0.1 pips, by like a micro pip, pipette, whatever you want to call it, at that exact moment, you don't have to obviously wait for the candle to close because as soon as price trades higher than it, that is a confirmed break, okay? So then at this point, that would become our low, and then you can draw your low across here, and again, price then breaks it. And then at that point, this then becomes our high, right? And then again, we get a break there. So you can see that this is the exact same price action as we have over here, but you can see how like essentially the trend changes quicker, way quicker here, because it's a lot more aggressive that we're using wick breaks, okay? So if you want to trade the way that I do and how the majority, you know, of us do in the community, this is what how we kind of separate these out. So we use candle body closes for the swing and internal structure, but we use wick breaks for fractal structure. Okay, so hopefully that makes sense. So in the previous lesson, we obviously looked at the 3 types of structure, and essentially this is sort of, I guess, our ultimate goal of what we're working towards, when you guys are going to have a great understanding of each of these 3 pieces and ultimately how we eventually put them all together to give us a very solid but deep understanding of price action with that mechanical framework in place. Now, I appreciate, you know, going through that lesson for the first time, whether you're sort of new to the style or especially new to trading in general, it can be quite overwhelming, especially when we haven't actually looked at, you know, like proper price action examples in depth. But like I said before, I think it's just good to at least give you some exposure to what we're sort of working towards. So you can kind of piece together in the back of your mind, right, what it is we're actually trying to do here. But what we're going to do over the course of the next few lessons is we're going to break down each of these 3 types of structure sort of into their own, you know, individual pieces. So we can really master them on their own, each individual concept, get very, very familiar with the rules that we use, the mechanical rules that we use to draw and identify them, right? We're going to do this on price action examples. We're going to do loads of walkthroughs. We're going to absolutely nail them on their own. So then eventually towards the end of the module, right, we'll practice putting them together, because that's when, you know, it makes sense of, okay, we have this information. We know how to map each individual piece of structure, but how do we actually interpret them, right, to make trading decisions, right? How can we actually use this to make money in the market, right? That's the whole goal. So for now, just kind of work with me through the next few lessons where we're literally just going to be learning them the rules, how to draw, how to identify them, almost like as much of a robot as possible. And as we get through the lessons, then you're going to start to see how the pieces of the puzzle all fit together for us to, you know, read the market, you know, in that really clear way. So without further ado, obviously by the title of this video, we are going to be concentrating on fractal structure. Okay, so over here, this is basically what becomes under what we're going to be looking at. So fractal structure and chalk, we'll get onto chalk in a minute, but essentially it's where we're looking at these tiny, tiny movements in price, which you'll see in a second, where it's literally sometimes 1 or 2 candles. Sometimes it's, you know, a few more candles than that, but it's you'll see it's basically very, very small movements in price that we refer to as fractal structure. Now, when you look at that fractal structure, you almost get that tiny, tiny pause in price action, and then price breaks that low. That's what we then call that change of character, right? And essentially, it's the fractal structure changing trend, which again, we'll get into in depth in a minute. But I just kind of wanted to refresh your memory as to what part of the overall bigger puzzle fractal structure plays a role in. So remember, fractal structure, when we get that change of character, when the fractal structure changes trend, that just signals to us we're getting that internal pullback, right? So this is the internal structure, and we're trading between that internal high and that internal low. When we get that initial change of character here, that just signals the start and end of those internal pullbacks. Likewise over here, right? When we get that internal move to the downside, and then we get that change of character, it's just to signal the start and end of the internal pullback of this range, okay? So just a quick memory there. But now let's kind of take a look at what rules we use, how we actually identify it on candlesticks, and all that fun jazz. So first things first, let's try and keep it simple and just kind of separate out both bullish and bearish markets when purely thinking about fractal structure on one time frame alone. Okay, so if we look at the bullish scenario here, right? So the fractal structure is bullish. Sort of the first thing you need to be thinking about when looking at fractal structure is looking at the candle highs in a bullish fractal market. Right? So the way that we define if price is moving to the upside and continuing to move to the upside, again, when purely thinking about fractal structure, is we want to be looking at, does each candle continue to break the previous candle's high? Okay, so if you start with, say, candle number 1, right, and you look at the next candle, does the next candle break this candle's high? Yes, it does, right? So that's the continuation of the fractal move. And again, does the next candle break this candle's high? Yes, so that's a continuation of the fractal move. Okay, we get to this candle here. Does the next candle break this candle's high? No. Hopefully we can see, right? This high here fails to break this candle's high here. So what that means is we have now had what we call a fractal pullback, okay? Because this candle here has failed to break the previous candle's high. So for the way that we look at fractal structure, that's literally it in a bullish market. We look at, does the candles continue to break each candle's high? Yes. So this is all part of that fractal up move. But when the next candle fails to break the previous candle's high, obviously this candle fails to break its high, we now have that fractal pullback, okay? So that's literally in a bullish market. How we then define and we look for where that fractal high is we can draw it out and we can draw the line across when we want to define the current active fractal high. We have to wait for the first candle to fail to break its high, because that then essentially means we get a fractal pullback. Okay, now there's a reason why all of these candles here, you can see across this whole screen, they're all the same color. And I've deliberately done that because the way that we look at fractal structure, the color of the candle is completely irrelevant. So whether it's a bullish candle or whether it's a bearish candle, right, an up or down candle, it's irrelevant for how we view structure, okay? And you'll see why as we get onto the charts. And what you really need to be training your brain to think about. It can be a bit tricky at first, but literally just looking at, in the bullish scenario, obviously we'll get into the bearish scenario in a minute, but in the bullish scenario, you want to be looking at, if price is moving to the upside, does it continue to keep breaking the candle's highs? Okay, yes, we're moving to the upside. The moment this candle fails to break that previous candle's high, we're pulling back, okay? I know it seems simple and you're probably thinking, get on with it, but we have to take it slowly because there will be scenarios in price action where, very frequently people get caught up and get a bit lost when they're first trying to get their head around this concept, okay? Now, a reason why that's key, and it seems pretty simple in this case, is what can very often happen in the market is you can get, say, a wick that's down here, right? And you'll be looking at imagine you can only see these 3 candles here, right? And you're going, okay, I see price move up, I see price move up, and then we've come down and we've broken that low there. So now you may think, right, that we've had essentially that change of character and the fractal structure shift bearish because it's broken that low. But remember, what is the rule for defining an up move with fractal structure in a bullish market? It's nothing to do with where these lows are, remember? It's all about looking at, does the next candle break this candle's high? Yes. So it doesn't matter if this wick comes down here, it's irrelevant. It doesn't matter because this candle broke the candle's high. So it's part of the up move, okay? Likewise, next candle here, it breaks this candle's high, right? So it continues that upwards movement. It doesn't matter what the low does. It doesn't matter that it breaks this low, right? In this instance, because price has continued to break these highs. Only once we get this pullback here where this candle fails to break this previous candle's high, that's then when that fractal pullback has started, and then we can mark out and draw across that this is the current active fractal high, right? And the low would be somewhere down here, but I haven't got it drawn on in this case, okay? And that's how we do it. Okay, so a fractal high in the bullish market, in a fractal bullish market, the fractal high, i.e. this high here, it's confirmed when the following candle fails to break its high. So that's when we get the fractal pullback, and that's where we get it here, okay? I think you guys get it, right? So then when we continue to the upside, right, and we break this high, we break the fractal high, that is your fractal continuation, right? You may want to call it, a fractal break of structure, an FBOS maybe. I don't refer it to that or label it as that, but that may be something you want to call it, right? But essentially you're just looking at the continuation of that move, right? So then what happens after we get the break? We continue the up movement. How do we know that? Well, the next candle breaks this high, the next candle breaks this high, the next candle breaks this high. Does the next candle break this high? No. So now we have the fractal pullback, right? So then we can mark on the new high and we can draw our fractal, our active fractal high line across, right? So now at this moment, right, imagine you can't see these candles and we're only at this candle here in the market that's printed. At this moment, we can go, right, this is our fractal high. And then we look back and go, where was the last low, right? This was the fractal low. So now the fractal structure, the fractal range is between this high, where the orange line is, and this low, okay? So now the whole time that price action is moving between these two lines, right? It can do literally, whatever it wants. It can break highs, break lows, whatever. As long as it hasn't broken that fractal high, the active high, and the active fractal low, essentially this price action, at least for now, right, it's completely irrelevant to what we're caring about with defining the fractal structure, okay? Until either this high breaks or this low breaks, everything in between, we essentially don't pay attention to. It doesn't mean anything, okay? We wait for either the low to go or the high to go, right? So obviously, as we can see here, the high eventually breaks. Now, with fractal structure, all we need to see is a wick break, okay? So for basically everything else that we use, we want to see a candle body close, but we'll get into this in the other lessons with swing structure and internal structure. We want to see price actually close above the high or low. But with fractal structure, and this is a key point, fractal structure is the most aggressive type of structure break that we use in our trading. Just always think about, when you're thinking about fractal structure, the first word you want to be thinking about is aggressive, okay? And you'll see, again, while we use it in the lessons, later in the lessons, why we're going to be using it in our trading. But as you're learning this now, just appreciate that this is the most aggressive way in which we're ever going to look at structure. So that's why we want, or we're happy to see a break occur when it's literally just a wick break, okay? The moment when you have your line drawn across like this on the active high, the moment in the market that price trades 0.1 pips, so a micro pip above that high, that is your break. That is a break of the high, right? That is your fractal continuation. The moment that price trades 0.1 pips higher than the high, the break has occurred, okay? So obviously, the candle could close, fine. They're both continuations, but at the moment that price trades higher, that is your fractal continuation, okay? Hopefully that makes sense, right? So like we said, we had the bullish fractal structure. All of these candles broke the prior candle's high. Then the next candle failed to break its high. So then we know we've had to start the fractal pullback and we can draw our high line across. And we know at this point we're trading between this high and this low. Easy peasy, right? We wait for either the low or the high to break. The high then breaks at this moment, okay? So we've had a fractal continuation. So when we get that continuation, obviously we know there must be a new active fractal low, right? Because it's not going to stay down here. We need to adjust it to where the new low is, okay? Now, with fractal structure, when we want to find where the new lower high is, we always take the nearest one to where we had the break. We always then want to find where the nearest one is, because remember, with fractal structure, we want to be very, very aggressive. That's the whole point of what we're trying to do here, okay? So that's why we want to take, when we get the break, we want to find where is the nearest low, okay? So as you'll see with swing structure, we always want to take the lowest low, but with fractal structure, we always want to find the nearest low, okay? So we'll get onto bearish in a minute, but the way we do it in a bullish market is the moment the fractal high breaks and we have that bullish continuation of the fractal structure, and we want to find where is our nearest fractal low. The way we do that is we look for the nearest candle that failed to break the previous candle's high. Okay, so it sounds like a bit of a mouthful and you have to think about it a bit, but when you practice this, it will be second nature and you'll be able to spot it instantly, I promise you. But again, when we want to find the nearest low when that high breaks, what we look for is the nearest candle that failed to break its previous candle's high. Okay, so if we look at this candle, Did this candle break the previous candle's high? Well, we can see here, yeah, it broke that previous candle's high. So essentially what we're trying to do here is we can see that this is still like one movement up, right? So this is not going to be a low because that's part of the up move. And that's why we're looking for where was the nearest candle that failed to break the previous candle's high. Well, this candle broke the previous candle's high. So that's part of an up move, right? So this is not going to be a low that we care about. Did this candle here, did it fail to break the previous candle's high? Yes, it didn't break the previous candle's highs, did it, right? So that now becomes our low, right? Because it failed to break the previous candle's high. Now, the reason why we care about this as a low is because you have to think about what happened with price here. Because it failed to break this previous candle's high, that means we had a fractal pullback here, right? So then from then onwards, all of the candles broke the previous candle's high. That's then an up move. So as you can see, right, we had a down movement and then we had an up movement. So that's why when this high breaks and we look for where is the nearest low, that was the last pullback. That's the end of the last pullback. So that becomes our low, right? So you think about it this way, all of these candles break the previous candle's high. It's all part of the up move. This candle fails to do so. So we start to get a pullback. The next candle breaks its low, right? So the pullback continues. This next candle fails to break its previous candle's low, right? So that now means we're having a bullish movement. This next candle breaks the candle's high, right? So that bullish movement continues. This candle fails to break this candle's high, right? So now what happens? It breaks its low, so we're moving to the downside, right? So then we have the movement to the downside. This next candle here, what does it do? It fails to break this previous candle's low, but it breaks its high. So now price means it's moving to the upside. So now you can see, right, if you look at just at the orange line and you concentrate your eyes, when we get the break of this high, and remember with fractal structure, when we want to find the new low, what do we take? We take the nearest low. And that's why this becomes the nearest low. Because as you can see, right, it moves to the upside, downside, upside, downside, upside. That becomes our new low. Okay, and I know that might seem a bit pedantic and a bit weird, but if you can get your mind around the mechanical rules, then that's literally how you can do it. And this is important to get it right, okay? So again, when we break that high, we want to find the nearest low. How do we do that? We look for the last candle, the nearest candle that failed to break its previous candle's high, because that essentially means that's where we've had the end of the last pullback before the high broke, and then all those candles break the previous candle's high, so that becomes our low. Okay, cool. And we got that rule down here, okay? So a fractal high or low, it's only confirmed once price breaks the fractal high. And the reason why that's important is because you see when we're in the live market here, price starts to pull back, right? And then this candle fails to break this candle's low, so we now know we're getting an up movement. We can't map this as the fractal low yet. It's not a valid fractal low. Why? Because the fractal high or low is only confirmed once it breaks the fractal high, right? Because what could happen is price could come down again, right? Because we know we're trading between this range at this moment. So that's why when we get this initial up movement here, you can't mark this as your low because it's irrelevant. Remember what I said before? When price is trading between the active fractal high and the active fractal low, this can do whatever it wants in between, right? It's not valid. We don't pay attention to any of it until either the active fractal high or the active fractal low it's broken. Only once that's broken here, then we look back and we go, where was the nearest low? Okay, it's here because this was the nearest candle to fail to break its previous candle's high. Okay, hopefully that makes sense. So in a bearish market, we do the exact opposite in a bearish fractal structure market, okay? So remember, in a bullish market, when we're looking to define an up move, what do we look at? We look at the highs. Does each high continue to break, right? We ignore the lows. We don't care about the lows, right? We look at the highs. Yes, so that's all one up move. Well, we do the exact opposite with the bearish structure. We look at, do all of the previous candles break the previous candle's low? Yes, right? That breaks it, then we fail to get a break. So that's the down movement, right? Then we have the up movement, and then we break the low. When we break the low, obviously that was the last candle here that failed to break the previous candle's low because this candle, right, breaks that candle's low. Does this candle break the previous candle's low? No. So that becomes our new high, right? And as you can see it visually, right? It makes sense. We come up and then we come down. And then all of these candles break the previous candle's low, and then we don't, right? So that's all one down movement, and then we have the pullback, okay? So when we start to pull back, at this exact moment when this candle finishes closing, we can mark that out as our low, and this is our high. So we're trading between this high and low. We don't care about what any price wants to do within here. We almost ignore it, let's say, until either the high or low breaks. At this moment, the low breaks, so we have that bearish fractal continuation. And remember, where is our new high? It's going to be the nearest high because we want to be aggressive with fractal structure. So where is the nearest high? The nearest high is the last candle to fail to break the previous candle's low, right? Because we want to see where was that last fractal pullback, that last bullish pullback. This was the last candle to fail to break the previous candle's low, right? Because we can see, if we go from the break and just work your way backwards. So we get the break. Did this candle here break the previous candle's low? Yes, it broke this low. Okay, so we're moving on to the next candle. Did this candle break the previous candle's low? No, it failed to do so, right? So that was that last pullback. And then we have the down movement, right? So that's why this then would become our new fractal high, right? This one would no longer be it, and this would be the new fractal range we're within, okay? So how you can visually see this and why kind of the logic behind it is we have a down movement, we have an up movement. All of these candles break the previous candle's low, then it fails to do so, right? And then all of these candles break the previous candle's low, then it fails to do so, and then all of these candles move down. And that's why if you look at the orange lines, when we break this low, where is the nearest high? It's here, right? So that becomes our new fractal high. And that's essentially what we're doing. If you can get your head around this, you're well on your way to being able to map this. Okay, so chalk, change of character, what is it? And how are we looking at this? Well, it is very simply basically everything that we just looked at, except we use the term change of character for when the fractal structure changes trend. Okay, so chalk, which is short for change of character, all that simply means is the fractal structure has changed trend, and we draw it on the line where that fractal structure changes trend, and that's it. I can't make it any more simple than that. That's as complicated as it needs to be, okay? So change of character, chalk, it's the fractal bullish structure changing to bearish structure, right? And vice versa. So all that means is fractal bullish structure shifting to bearish, i.e. the trend change, and then again, right? So what do we have here? All of these candles breaking the previous candle's high, then this next candle fails to do so, so we pull back, right? Then we continue that move, we get that bullish fractal continuation. All of these candles break the previous candle's high, the next candle fails to do so, so we start to pull back, so now we can mark on our highs here, right? But we have our high and our low here, we wait for either the low or the high to break, the high breaks, at that moment we want to find where is our nearest fractal low. Well, it's going to be the last candle that failed to break the previous candle's high. That would be this candle here, right? Because it failed to break this previous candle's high. So this is our low, right? So we have an up movement, then we pull back. So at this moment, we'd mark that out as our high, and this would be our low. Price then comes down and it takes the low. So this is when you have your bearish chalk, your bearish change of character. The fractal structure has now shifted from bullish to bearish. And that is what we're trying to do with fractal structure, is we're trying to identify these chalks, okay? And that's it. That's if, I know we're going to get into later the reasoning behind why we use these frameworks, but this is the main reason we're going to be doing fractal structure in live market. We're not going to be marking on all of these continuations, right? We only care when we see that first little aggressive shift in structure, and that is going to help us with some trading decisions, okay? And this is essentially what we're looking at. Chalk is what we care about. Now, there are going to be instances where price action is super choppy in a live market, and you're going to be getting bearish chalks, bullish chalks, bearish chalks, and all that simply means is that price action is quite indecisive, right? And we're not going to really pay attention to it in those instances, as in it's not going to be very useful information, right? So it's all about knowing when and when not to pay attention to change of character, but we'll get into this at a later date. For now, we have to just practice identifying it and literally knowing how to label every single one. And then in the future, that's when you'll learn when to pay attention to it and when not to, all right? But for now, you need to know how to identify it first. That's basically what we're trying to do with these lessons, okay? So we get that bearish change of character. Next candle fails to break the previous candle's low, so we get that pullback. All of these candles break the previous candle's low. This candle fails to do so, so we get the pullback, right? And then all of these candles break the previous candle's low, so we continue to get that down movement. Then we get the pullback, right? You guys are getting used to this. And then we have a down movement, we have an up movement. But remember, we don't care really about any of this, because why? Because at this moment, it's trading between the high and the low. So we almost ignore everything between the high and the low until either the high or low breaks. Once the low breaks, then we look back and we want to find, right, where is our nearest high? Get rid of these lines. Where is our nearest high when we break here? It's the last candle that failed to break the previous candle's low. Why? Because that's the last up movement and then the down movement. So that's our high, and obviously price then goes on to break it. So when we get the bearish fractal structure, which we've had since here, when that first shifts to bullish, which happens here, right? So it happens when we take this high, not this high. Because some of you may think, right, you look at price action, you see that's kind of the pullback and that's the movement. Yes, but remember, chalk is aggressive. We want to be super, super aggressive with this, okay? And we want to find the nearest high, and that was it. So as soon as price trades up above this by 0.1 pips, right, the moment that happens in live price action, we have that chalk confirmed, and the fractal structure has shifted bullish. This then becomes our a new low at this point, right? Let's make sure this makes it a little bit lower. All right, so this would be our new low. Actually, sorry, this would be our new low. I've done that slightly wrong. Okay, just going to adjust this here, and you'll see why in a minute. It's a bit more advanced. If I can see if I can get this to move. There we go. Okay. Because this candle, right, it was the last candle. So if we look back and we get that bullish change of character, and we look back, where was at this point the last candle to fail to break the previous candle's high? Well, did this candle here break the previous candle's high? Yes. So this is a part of the move. Did this candle here break the previous candle's high? Yes. So it's a part of the move. Did this candle here break the previous candle's high? No. Okay, so this is actually our nearest low, right? So that's a bit of a tricky example, and I even got caught out there, right? So this then would become our active fractal low, right? Then we get the pullback and we break up, right? And obviously then this becomes the last candle to fail to break the previous candle's high. So that becomes our new low there, okay? So cool. We'll go through tons of examples, but the main purpose of this little mini lesson here is that a change of character is simply the bullish structure shifting to bearish when we get that initial fractal trend change, and then vice versa. Okay, cool. Now we're just going to look at a few examples where I, typically find people can often get caught out on. Okay, so sort of, some common errors. So let's look at the first one. So we've obviously brought in the candle colors now, and this is where, it can kind of throw you around a little bit, okay? Because your brain can see the pullback. But remember, we have to, with fractal structure, we have to ignore the color of the candles and look at, did the candles break the previous candle's highs or lows, right? That's what we care about. So in this instance, let's concentrate on the first example. Start from the start, right? All of these candles break the previous candle's high, so that's all part of the up move. Now, in this instance, right, these two candles, both of the highs of the candles, they are the exact same price level. So this candle here and this candle here, they both trade exactly as high as each other. So is this a pullback or not? Regardless of the color of the candle, right? Is this a pullback or not? Well, remember, what is the definition of a fractal pullback? It's if it fails to break the previous candle's high. So if this candle here trades exactly as high as this candle here, then has it broken its high? No. Right? So that means the fractal pullback has started. So if you see perfectly equal highs, that is now the fractal pullback started, and you can mark this out as your current active fractal high, okay? So then what that means is as pricing continues to break this high, right, we have now had a continuation, a fractal continuation, and then that will become your low, right? And then eventually we get that change of character, right? So when you get exact equal highs, that is the fractal pullback because it's failed to continue the bullish movement, right? This is all bullish, then it's failed to do it, right? So that is your fractal pullback, okay? This one here is probably the most common one I see people get caught out on a lot on, and it's because of the way the candle looks, and I totally get it. It was a bit confusing for me. It took me a little while to get used to it, but this is where you have to really train your brain to, again, what? Look at, are the candles breaking the previous candle's high? Does this candle break the previous candle's high? Yes. So although it's a down movement, and although it breaks this low, remember, it doesn't matter. You need to be looking at the highs. All of these candles break the previous candle's highs. They continue to the upside, again, continue to the upside, then we get the pullback. So this is not a fractal low. So when price breaks this low, it's irrelevant, right? The way we view fractal structure, if we just had these candles, is that's all one up movement, and then that's just the pullback, and this would be a fractal high, okay? So again, don't get thrown around by the color of the candles, or if it breaks the lows here, right? Obviously, if the fractal low would be down here, like if we had this, right? As long as this low doesn't break the active fractal low at that point, then this is all one up movement, then we get the pullback, right? And then you'd be trading between this range, okay? And then the last one we're going to look at is just, this is the perfect example of what we're looking for, right? All of these candles break the previous candle's high. This one fails to do so, so we pull back. Then all of these candles break the previous candle's high, so this is our chalk level, and then we get that change of character there, okay? Cool. And then last but not least, this is kind of one other example where I very frequently see, people understandably get a little bit caught out on, okay? So let's look at the first example, right? So all of these three candles break the previous candle's high, right? So we know that's part of the up move. Then this candle fails to break the previous candle's high. So now we get the fractal pullback. Okay, so then we can mark this out as our high, and then let's just say our low is down here, right? So we do nothing until either the high is broken or wherever our low is broken. Once the high breaks here, at that exact moment, we want to find what? We want to find the nearest fractal low. So what's the definition of the fractal low when we're bullish? We want to find where was the nearest candle that failed to break the previous candle's high. Well, did this candle here break the previous candle's high? Yes, it broke its high. Did this candle here break the previous candle's high? Yes, it did. So that shouldn't be the low, right? Now this candle here, did it fail to break the previous candle's high? Yes, it failed to break the previous candle's high. Okay, so let's get rid of these lines. So this, right, based on that definition, this should be the nearest low because that is the nearest candle that failed to break the previous candle's high, right? So you'd be forgiven for thinking, right, well, we should draw our chalk line through here. Well, hopefully you can see why that doesn't really make sense because after that low was printed, what happened? Price traded lower and then we had the up movement, okay? So in these instances, when that happens, when you find the nearest candle that failed to break the previous candle's high, right? But then the next candle obviously trades lower, then this is where this becomes our low and that's our true chalk line, okay? So that's just an instance in which you need to adjust it to the next candle. So obviously it doesn't make sense to have a line where price has already traded through it, okay? Now, the reason why this candle is colored white is because it's an inside bar and we use an indicator, which I'll put in the links below to just color our inside bars a little bit different. An inside bar is very simply a candle that fails to break both the previous candle's high and low, right? So it trades inside the high and low of the previous candle, okay? That's all an inside bar is. And sometimes it can just help you to spot it in the market where price fails to do so, okay? So again, when you see that high break, you want to look at where was the nearest candle that failed to break the previous candle's high. Okay, that failed to break the previous candle's high. So this becomes our low, our fractal low, but obviously price has already traded through it. So we just adjust it to the next candle and that becomes our candle in this case. Now, if we look at the second example, it's very, very similar, except it's just not an inside bar. So all of these candles break the previous candle's high. Then we get that pullback, right? So then we know this is our high and this is our low. We wait for either the high or low to break. The high breaks over here. So then we want to find our nearest low. Did this candle break the previous candle's high? Yes, so that's part of the up move, right? Did this candle break the previous candle's high? Yes. Okay, so that's part of the up move. Did this candle break the previous candle's high? No. Okay, so this should be our fractal low, right? But similarly, like the case before, price has already traded through it when the high goes, so we just adjust it to the next level, right? And we adjust it to here. And hopefully you can see the reasons why, right? If you look at price, it comes up, it comes down, essentially it comes up, then we get the down movement, and then we get the up movement, right? So if you look at this, if I move this away, you can see when the high goes here, where's our nearest low? It's here, right? Similarly to here, we have the up movement, we have the down movement, and then we have the up movement, okay? And that one's a bit simpler to see, but that's the reason why, okay? So that kind of wraps up, hopefully covering the sort of common errors that I see. I know there's probably quite a bit to get through there, a few little lessons, and it can seem a bit weird to kind of get your head around, and it can be quite wordy, but I promise with a bit of experience and practice, you'll be able to see this with second nature. And the beauty of this is 100% mechanical. The way we view fractal structure, obviously change of character, it is 100% mechanical. You can program this into an algorithm. I have tested this over a million different weird, every single price action example you could think of, and I have not yet found an example where it needed any form of discretion. It is 100% mechanical, okay? So in the next lesson, what we're gonna do is we're gonna go through price action and we're gonna do a walkthrough, and we're just gonna practice this using bar replay and just practice mapping this and take it nice and slow. And then I'm gonna give you guys some homework to test it, and then you can compare it to mine just to really nail this in, okay? So now we've been through the theory and through, sort of a few typical sort of tricky scenarios that can often catch you out when trying to map your fractal structure. It's probably about time we actually do a walkthrough on the charts using actual price action examples. So what we're going to do now is we're going to go through, I don't know, maybe about a couple of weeks worth of price action on the 4-hour chart on euro dollar. Starting around 12th of May 2022. So we'll go through some examples together, literally loading it bar by bar, talk through all of the rules so we can kind of get very familiar with it. Then what I'm going to do is I'm going to ask you to pause the video after we do that. And I'm going to give you some specific dates, like a date range to go through, and for you to then go and apply this to your own charts to practice doing it. And then you're going to come back and then we'll go through that same time period together. So then you can compare your analysis to mine, because, it can be quite easy to watch, someone do something. It all makes logical sense. You're like, yep, I get it, easy, no problem. But then when you actually go and do it yourself, right, without that guidance, that's where it really highlights where, the current potential gaps may be in your knowledge, right, with your current level of understanding. So again, we'll go through, I don't know, maybe a couple of weeks of price action or something, depends on how long it takes, right? And then I'll pause the video, give you a time period to go and do yourself. You can then come back, unpause the video, right? And then watch us go through it together. Now, what I'll also do is I'll put, hopefully you haven't already looked, but I'll put in the notes below the video, detailed screenshots of other time periods of data. So then if you want even more practice, right, you can go do those yourselves and then go and compare those to the screenshots that I put below the video. So there should be more than enough for you to practice with and compare your analysis to mine. And as the data continues to obviously print from the time of recording, it's September 2022 at the moment. Obviously, people will be watching these lessons, watching these videos at a future date. As there's been more price action, I'll add in those examples to the notes below the video, so you'll have plenty of recent P8 to look at. So without further ado, let's dive into it. So I've just sort of brought price back to a pretty sort of easy level for us to continue from. So I won't go over this price action to tell you why this was the last bearish change of character, but just believe me, it is. And for some of you who want to go test it, you'll be able to arrive at the same point. But from now on, we'll go forward and I'll sort of, we'll just go for it here. So when we get a bearish change of character, right, we obviously know that the fractal structure is bearish at this point, but we want to find our current fractal range that we are within. So to do that, we need to know where is our current active fractal high. So after we get a bearish change of character, if you know the rules, we want to look back and we want to find where is the nearest high. And we define the nearest high as the nearest candle that failed to break the previous candle's low. So did this candle here break the previous candle's low? Yes, it did. I'm going to zoom in even more. All right. Let's bring these over here. Yeah, we can see that it did, right? So did the next candle, did this candle here break the previous candle's low? No, it failed to break that previous candle's low. So this now becomes our current active fractal high. Because basically what happens is these three candles break the previous candle's low. This one fails to do so. So that means that we've had that fractal pullback and then we've had the down movement. So that's why when we look back, that's our nearest high. Because remember, we want to be aggressive with fractal structure. So we can draw this on here, right? Just use a trend line tool. So if you want to do this, you can grab the trend line tool on the left-hand side and then you can make different templates. So like say you open this up, there's a text box up here. You can add whatever you want. So like fractal high, I've done fractal low for the one, right? Because you can put the text in the middle or the bottom, center, left or right. You can play around with that. It's all reasonably self-explanatory, text size, color, etc., what time frames it will appear on, all that fun stuff. And then the style, you can change the thickness of the line. You want dosh datted, all that fun stuff. I'll let you play around with it, okay? Cool, so that's the fractal high. And obviously this will be the fractal low at the moment, but I'm not going to map that on until we actually get our fractal pullback. So let's play price forward candle by candle. So the next candle obviously continues that fractal down move because it breaks the previous candle's low. All we're looking at is the lows of the candles. Remember, we're not looking at the highs unless, of course, it actually broke the current high, right? So let's keep going. The next candle continues that move, right? It breaks the previous candle's low, so let's keep going. Let's see, the low of this candle is, if you look up here, right, you can see the actual coordinates if you're never quite sure, because sometimes it can be a bit hard to see if it's close. The low of this candle, if you look up there now, see how that says 54.7, right? The low of this one is 54.2. So this was half a pip lower. So despite it being a bullish candle, we haven't actually had a fractal pullback yet. Why? Because this candle here, it did actually break this candle's low. So that's still part of the down move. And that's why you have to really train your mind to ignore the color of the candles when doing this, when looking at fractal structure, okay? So next candle along, now we finally have that confirmed fractal pullback. Why? Well, because this candle failed to break the previous candle's low, right? So that means we have now had that fractal pullback, and now we can actually confirm that this is the fractal low. So now we know the range that we are trading within. So for now, all I want you to think about is when you know your fractal low and you know your fractal high, essentially you want to ignore everything that happens in between there until either the low or the high is broken, right? It could just be wick, right? Price only needs to break it by 0.1 pips for it to count as a fractal break, right? A fractal boss. So what we can do now is we can just play price forward candle by candle until either the low or the high goes. And now we see the fractal low breaks, okay? So when that low breaks to the downside, that is essentially just a continuation of the fractal structure. So for that, we're just going to use a solid line in this instance. Now, in the live market, I wouldn't draw this on, which you'll see in a bit in later lessons, but just for the sake of the exercise, right, we want to mark these on just to know that there was a fractal continuation. So you may want a line that's a bit different to the chalk, because remember, chalk is when it changes trend, and let's just say we use a solid line for a continuation of the fractal trend, okay? So as we saw, the candle, right, we pull back and then we came down and then we took the low, okay? So when it takes that low, we now have a new fractal range. So as soon as we get that low, at the moment it happens, so you don't have to wait for the candle to close. The moment that low goes, so like imagine you're watching this in the live market, you have your low here and your high here, and then you see price come down and it breaks that low. The very millisecond that happens, that price trades 0.1 pips lower than this low, right? That is a confirmed fractal break. And at that moment, at that exact moment in the live market, right, you want to look back and go, where is our nearest fractal high now? Remember, it's the nearest candle that failed to break the previous candle's low. So did this candle break the previous candle's low? Yes, it obviously did. Did this candle? Yes. Did this candle break the previous candle's low? No, it didn't, okay? And that then becomes our high, right? Because no candle traded higher since it either, right? So this is where then we can move our fractal high down to this level at that exact moment, okay? That becomes our fractal high. And obviously this is the low, but we can draw it on when we actually get the next candle to fail to break that previous candle's low. So now we've actually had that confirmed pullback, that fractal pullback. Why? Because this candle didn't continue the down move, right? So now we can know with confidence that this is where our active fractal low is. So at this point, the fractal structure is still bearish. This high needs to break for there to be a bullish chalk, right? So this is essentially your chalk line, right? If the fractal structure is bearish, your fractal high is essentially where your chalk level would be, right? That's where you can leave that chalk line. Because if this high goes, then what happens? Then the fractal structure has shifted bullish and we have that bullish chalk, okay? So let's see what happens next. Nothing happens, right? We're just moving sideways. And remember, when you have your active fractal range, essentially you do nothing until either the high or the low is broken, right? We basically just ignore everything that happens in between. It's just noise, right? For now, we don't pay attention to it. Okay, so nothing's happened. We haven't broken the high or low. Okay, now we have broken the fractal high. So because the fractal structure was bearish and now it's shifted bullish because we've broken the fractal high, what is that break, right? It's a chalk. It's a change of character because the fractal structure has shifted from bearish to bullish, right? So that is your chalk. So I've just shortened CHOCH chalk to CH just to keep it a little bit neater. Okay, so now we've had that fractal breaker structure to the upside, which is a change of character, right? Because the fractal structure has shifted trend. So at the exact moment that price breaks that high, again, you do not have to wait for the candle closure with fractal structure. At the exact moment that price breaks that high, we need to know where is the new fractal low. And it's the last candle that failed to break the previous candle's high. So let's zoom right in. Okay, so start your way from the current candle that broke. Did this candle break the previous candle's high? Yes, it did. Okay, cool. Did this candle here break the previous candle's high? Yes, it did. Okay, cool. Did this candle here break the previous candle's high? No, it didn't. Okay, so this should be our fractal low. But if we draw it across, price is traded through it. So does that make sense? No. Okay, so that's then, remember that example that we went through in the previous lesson where we then adjust it to this level here, right? And then that becomes our new fractal low. Okay, now if you think about it from the way price moved, right, we essentially had that up movement, that down movement, then we had the inside bar, then we come down and then we go up. So that's why that's our low. Now these are inside bars. I know I briefly talked about them in the previous lesson. And that is essentially your it's an inside bar is a candle that fails to break the previous candle's high or low. So you see how it trades between this high and low. That's why it's an inside bar. This is also an inside bar. Why? Because it also traded between the high and low of this candle, right? So I've just got an indicator on at the moment that colors them that way up here. So if you go into here, right, it's just got it for that color. If you change to orange, they would mark them out orange, okay? So that's all it is an indicator that supports those rules and it just colors them a little bit differently. If you want to add that to your charts, just go up into indicators. It's just off screen, unfortunately, but indicators just above here, right? And you'll see it. And if you type in inside bar, you can find there's many in there. A few of them are a bit buggy. So what I'll do is I'll put a link in the notes below of the one that I found works perfectly fine, okay? Cool, so just a quick recap. We obviously shifted bullish, the fractal structure. We had that bullish change of character to the upside. That exact moment, literally the exact moment in the live market that price breaks that high, you do not have to wait for the candle close. There has been a bullish fractal breaker structure to the upside. In this case, it's a change of character because before the fractal structure was bearish, now it has shifted bullish. So that's why we label it as a chalk rather than just a line like this, right? Because that's a continuation of the fractal trend. So when we get that bullish change of character at that exact moment, we want to find where is the new fractal low. So we want to find the last candle that failed to break the previous candle's high, which brought us to this inside bar because this inside bar failed to break the previous candle's high. But it doesn't make sense to draw a low here, does it? Because price has traded through it. So that's why we just adjust it to the next candle. Easy enough. Don't worry, you will get this. This will come with time and experience, but you can literally see this in a split second. And in the live market, all we'll be drawing on is this. We'll quickly just draw on that. We won't bother with everything else. Trust me, you'll be able to see it so quickly, okay? Cool. So now we are bullish on the fractal structure. Next candle. It's a bearish candle, but what does it do? It breaks the previous candle's high. So it's all part of the up move, okay? So we keep going along. So now this candle has done what? It's failed to break the previous candle's high. So now means we're having what? We're having that fractal pullback. So as soon as we have a candle that fails to break the previous candle's high in a bullish fractal market, we can now mark on this as our high. Now, when it came back down, did it break the fractal low? Well, what is the low of the fractal low? If I put my mouse on this candle and then we look up here, right? Just gonna put my mouse back there. The low is 89.2. And what's the low of this candle? 89.4. So what that means is this latest candle, it didn't actually break this low. It traded 0.2 pips higher. So when it's really, really tight to see, that's where these coordinates become really useful, okay? So this candle did not break the fractal low, so we're still within this range, right? Let's see what happens next. Okay, price continues and breaks the upside. So now what we have had is we've had that fractal continuation, okay? So I'm just gonna move this out of the way, and then I'm gonna copy this line here. Now, if you ever wanna copy a drawing, if you hold down Command on a Mac or Control on Windows, so if you hold down the Control button and then you click here and drag, hold down the mouse, you can copy a drawing that you already have, okay? I'm just gonna use this to show that fractal continuation. Okay, so at that exact moment, we had the fractal continuation. Where is the nearest candle that failed to break the previous candle's high? Well, obviously this candle did break the previous candle's high, so we go to the next one. Did this candle break the previous candle's high? No, okay. So that becomes our new low, right? So it basically looks the same, but that would be our new low here. Cool, next candle. Breaks the high, so it's part of the up move. Pulls back, so that's our fractal high. Okay, I'll go a little bit quicker now. Okay, so we've pulled back, trading between this range, and we've continued to the upside. Okay, so now we have a new fractal high. So again, we can use this as here, move this out of the way. There's our fractal continuation. Now, where is our new fractal low? It's the last candle to fail to break the previous candle's high, which would be this inside bar, right? So now we adjust it to here, right? And that's the fractal structure continuing. Okay. Big candle there, so we continue to move up, zoom out a little bit now. And now we pull back, right? This fails to break the previous candle's high, so this becomes our new active fractal high. And I know this exercise is a bit tedious, but we have to go through this process to make sure you have, absolute crystal clear understanding of how to do this, so you can spot it, in tricky scenarios. Sometimes it can be a bit hard to see. But in terms of of our actual trading, right, you'll see how we incorporate this in the live market going along. But for now, you just kind of just have to do this sort of, tedious mechanical exercise to make sure you really understand it first, okay? And then you'll learn how we actually interpret it to make trading decisions. So we pull back. Again, we don't break the high low. So price can do anything at once. Now, this is a key lesson because this is where people get caught out a lot in the live market, is they'll see price come back like this, right? And then it breaks a high and they go, oh, is that a change of character? And they'll see it come up like this. And then they'll come down and they go, oh, is that a change of character? We've had a bearish shock here. Well, no, because where are we? We're trading within the current active fractal range. So everything in between here, we ignore, okay? Now, there's some more advanced concepts where we'll look at, where you can pay attention to a chock within here, and we call that an eye chock. But for now, don't worry about that, and you do not want to be doing that. You want to be 100% strict and mechanical, and as long as price has not taken out the current fractal high or the current fractal low, you want to ignore everything in between. That is my solid advice for now, okay? You want to stick to that. Cool, what's next? Okay, we break the high. Again, I'll just do a few more examples and then I'll let you guys go and practice this yourself. Just do another 2 or 3 examples, okay? Just want to get some slightly more complex price action. So when we break that high, where's the nearest candle that failed to break the previous candle's low? Let's zoom in a little bit. Well, this candle broke the previous candle's high, right? This candle broke the previous candle's high, right? Did this candle break the previous candle's high? No, obviously it didn't do so. So let's draw our low here. Oh wait, doesn't make sense. No, price is traded lower than it. So that's why we then move it to here, right? You can see why. Price obviously comes down like this and then does that. So that's why that's our nearest low. Cool. So this moves to here. Again, we'll just do a few more examples. Okay. So now we have a pullback. So now we can define that that's our fractal high because it failed to break the previous candle's high. See what happens next. And then we break structure to the downside, right? Break the fractal structure to the downside. So what is that? That's a change of character, because when the fractal structure changes trend, that's what we call a chock, right? Change of character, okay? Now, when this low breaks here, this fractal low, where is our new high? Well, we need to look back and see where was the nearest candle that failed to break the previous candle's low. Well, this candle broke this previous candle's low, this candle broke this previous candle's low, this candle failed to break the previous candle's low, so that would be our fractal high, so it stays in the same place in this instance. Cool. Now what happens? Price fails to break the previous candle's low, so then we can define where our fractal low is. Cool, so now we do nothing until either the fractal high or low breaks. Now, in this instance, right, let's play this. Sometimes it can be a bit tricky to see what happened first, right? Did price break the low first? Because what could have happened, right, is it could have broken that low first, then that would have become the high, right? At that moment, price comes down, right? This would have become the new high. But sometimes when the candle is still moving, it can then come up and break the high to the upside, and then you have a bullish chock all in one candle, right? So again, I'll go over that. You can have this inside bar here, and then this next candle, if it moves down first and breaks the low, that is a continuation of the fractal trend, right? Yeah, because it just continues down, it breaks the low. So at that exact moment, this would become the high at that moment, right? Where that high is. But as price is down here in this same candle, right? Because obviously this is a 4-hour candle, it takes 4 hours to print. Price could come back up to the upside and then break that high, and then you'd have a bullish change of character. So that can happen all in one. So how do you tell what happened first? Did it come up like this and have a pullback and then go down? So then it's just a continuation, and this would be our new high and low, right? Or did it take the low first and continue? So that's the continuation, and then have a bullish change of character here, right? So that's what can happen when you have one candle like this, and this is a bit more complex. So if you didn't see it happen live, what you can do then is jump down to the lower time frames and see what order it happened. Okay, so if we go down to the M15, what can we see? Well, we can see here, all right? So we're just looking to see like what price action made up the 4-hour candle, or we can see price pulled back, right? And then it came down, all right? And it took the low first. Okay, sorry, it broke the high first, and then it came down. So it's a continuation at this point, okay? So this was the 4-hour price action, right? It pulled back, and then it took the low. So in this case, it's just a continuation. Whereas what it could have happened is it could have come down, it could have taken the low, and then at that moment, that would have been the high, and then price could have broken at the upside, and that would have been a bullish chock. But it didn't. It pulled back first, and then took the low. Okay, so that's why it's a continuation and not a change of character. Okay, it's a little bit more advanced, but they're the ones that you need to kind of keep an eye out on, but you'll get the hang of this as we go. And really in this example, you can kind of tell just by looking at the candles, right? Because we have the bullish pullback, right? You can see we close up here, then we come up, and then we have a bearish candle close. So that one's a bit easier to spot anyway, okay? So that's a good sort of good complex example that I'm glad kind of came up. Sometimes those can catch you out a little bit. So what did we have? We had a fractal continuation to the downside, and then at this point, where is our fractal high? It's the last candle to fail to break the previous candle's low, which would be the inside bar, but the next candle traded higher than it, right? So this is where we're gonna adjust it to. So I'll do one more example, and then I'll give you guys some homework. So that continues the fractal move to the downside. This candle here fails to break the previous candle's low, so now we have a confirmed fractal pullback. This is the range. We do nothing until this range is broken now, okay? So we chill out. Okay, it's not doing anything. Now we've broken the high to the upside. So we had bearish fractal structure, now it's shifted bullish. So what do we have? We have a change of character. Again, you can hold down Command or Control and drag with your mouse just to copy that template there. All right, and now we have that bullish move to the upside. Where is our fractal low? Well, we need to find the nearest candle that failed to break the previous candle's high. That broke the high, that broke the high, that broke the high. That one failed to break the previous candle's high, so the low stays in the same place. And that's where we're at. So I'll leave that there. So that actually took a little bit longer than I thought just to do a few bits of price action. So that's brought us to the 19th of May. So what I would say to you is go to the end of the month, right? Go do from the 19th of May, 2022, and do this all the way to the end of May, right? So the 30th or 31st of May. I can't remember how many days there is in May. 30 days of September, April, June, and November. Yes, there must be 31 days in May. So go to the end of that, right? It's the start of June on the 4-hour chart on euro dollar. Use kind of the exact same templates I have here, or whatever you prefer. Map it out, right? And then come back to this video, right? Pause it now after talking, right? Come back to this video, and then we can go through it together, okay? So pause it now and go and do that. Cool. Okay. So hopefully you've done that. You didn't cheat, right? So from the 19th of May to the end of the month, and let's go through it together. Now, what I'm going to do now going forward is I'm going to do this a lot quicker. Okay. So, if you're not quite sure, just watch the previous bit as many times as you need, but I'm going to do this a bit quicker now because hopefully you guys should be a lot more comfortable with it, right? So we go forward, we continue the up move, we continue the up move. Okay, now we pull back, right? So this is going to be our fractal high, right? Fractal low still in the same place. So we do nothing now till either the high or the low goes, right? The high goes, so now that's a continuation. Okay, so we can put this here. Now we want to find where our nearest fractal low is. It's the last candle to fail to break the previous candle's high, which would be this low here, okay? So this becomes our low and we continue the movement. So let's see what happens next. Price continues to the upside, continues to the upside, continues to the upside, pulls back. So that's our fractal high. Okay, cool. Now we pull back and then we break the structure to the upside. So then we have a continuation. All right. And then this becomes our fractal low, as this was the last candle to fail to break the previous candle's high. Cool. So we pull back. You see, sometimes if you go really quickly, you can miss things, but we had that continuation, right? Price pulls back, so we had the fractal pullback, and then we continue to the upside. Inside bar was the last candle to fail to break the previous candle's high, so that becomes our fractal low. So we pull back, so this becomes our fractal high. All right. What happens next? Nothing, right? We wait for the high or low to go, and then the low goes. So that now means we've had a change of the fractal trend, so a change of character, and then that becomes our level of chalk. So we can put that there and that there. Now, when we get that change of character, this is where you have to be paying attention, right? And you can't speed through it. Where is the last candle that failed to break the previous candle's low? Well, we can see all of these lows traded lower, that low traded lower, that low did not break the low, right? So that becomes our fractal high. But wait. All right, we have to be 100% mechanical here. You can see if we zoom in, price traded higher on the next candle. So this is where then you have to adjust it to here, and that would be our fractal high, okay? Cool. So those candles break the previous candle's low. This one fails to do so, so now we have the fractal pullback. So we do nothing until this range breaks. Okay, they're the range breaks, right? So now we have a bullish change of character because it was bearish and now it's shifted bullish because price has traded higher than that high. So where is our fractal low? Well, we look back, where was the last candle to fail to break the previous candle's high? So all of these highs break the previous high. This candle here fails to break the previous candle's high, right? It fails to break this high. So that becomes our new low. Why? Because you see price comes up, then it comes down, and then all of these candles break the previous candle's high. So that's why that becomes our new low. Okay, so there's our fractal low. Cool, nearly there, not long now, guys. So that continues the up movement, that pulls back, that's our fractal high. All right. Nothing, we do nothing right until the range breaks. Okay, we get a bullish fractal continuation because the fractal structure was already bullish, so it's not a change of character, it's simply just a continuation. Okay. Now, when the high breaks, where was the last candle to fail to break the previous candle's high? What was the high of this candle? The high is 370. The high of this is 366. So yeah, that did break the high. So this is the last candle to fail to break the previous candle's high. So that becomes our fractal low, okay? That breaks the high, that breaks the high, that breaks the high, does it? Let me double check. 86.5, 87, yeah. So that was a continuation of the fractal structure. Now we pull back, so now we know where our fractal high is. Okay, there it is. Cool, let's see what happens. And we have a bearish break of the fractal structure, so that means a change of character, right? Because we switched from bullish to bearish. Whereas the last candle to fail to break the previous candle's low, these all break the lows. This one didn't, so the fractal high stays in the same place. Okay, that one, yeah, that does trade lower. So again, ignore the color of the candle. It's still part of the down move, right? Okay, now we've had the pullback because this candle fails to break the previous candle's low. So now you can mark that out as the fractal low. Do nothing until the range breaks. So we have a continuation of the fractal structure. All right, we get a break of this low here. Now, at this exact moment, where is the last candle that failed to break the previous candle's low? Where we can see here, we had a break, we had a break, we had a break, we had a break, and then that fails to break that previous candle's low. So the inside bar would be the high, but as you probably hopefully got correct, whoops, this next candle trades higher, right? So this is the instance, right? This is a bit of a tricky one where I would move the fractal high to there, right? Wherever it trades higher, that's where the high is going to be that I want to see go. Okay, so not this high here, because all of those candles are part of the down move. It'll be the inside bar. So you start from the inside bar, look left, where's the highest point? It's this point here, okay? So that's your fractal high at that point. Okay, then we get a pullback. So now we know where the fractal low is. We've come to June, okay, sweet. So yeah, hopefully that kind of cleared up some of the price action you guys tried to had a go at. There's a few little tricky ones in there. And yeah, I mean, I'm trying to think of sort of any things I want to add to here. Again, I'll stress the importance of right now, this is just kind of like an exercise in which you have to go through this process to just fully 100% mechanically understand the rules, especially when it's some, sometimes it can be quite tricky examples to figure it out and get your head around. Sometimes it's obviously clear and easy. But once you've got that understood, then the task becomes of understanding how do we actually use it as useful information with the trading? Like when do we pay attention to it? When do we not? And what does that actually mean? Okay. And that will come in the later lessons, and that will also come with time and experience. But for now, just trust the process, right? Trust the reasons why we're doing this, trust the reasons why we're going through these exercises, and get it nailed down. So I'll leave the video here so it isn't super long. Okay, but what I will do is for maybe in the next few months is I'll do some detailed screenshots of the price action, and I'll put it in the notes below the video. So what I'd recommend is you go through and do yourself, right, on the 4-hour chart for the next few months that are below in the notes, and then compare it to the notes within there and really study it and make sure you have, every single one, pretty much completely correct, okay? Now, again, there will be times when price action can get super messy and super complex. And don't worry if you can't 100% wrap your head around it, because to be honest, in a live market, that's when I'm not paying attention to chalk, right? I'm just let price do its thing. It's messy, it's incorrective. It doesn't matter so much. But yeah, I'll leave that there, okay? Hope you guys took some value from that, and I'll see you in the next one. So now we are going to look at swing structure, and swing structure is probably what I would argue is probably one of the most important things, let's say, for you to know. It's basically where I start whenever I have a blank chart and I sit down. It's the first thing I am basically looking to map, looking to analyze, and looking to figure out. So in live markets, in the future, if you ever get confused, if you're ever getting lost, if you're wondering where to start, swing structure is always the starting point of sort of whatever time frame you were looking at, because once you can figure out what current swing range you are in, so where your current swing high is and where your current swing low is, that will tell you whether the swing trend is bullish or bearish, which for obvious reasons is quite important, what swing range you're working within. So that way you can build, it's kind of where you start from to build the rest of your analysis, and where you start from to build your trade ideas. Because if you get your swing structure correct, obviously with using all of the other confidence you're going to be learning, but generally that's going to help you to be on the right side of the market far more often than not. Okay, so without further ado, let's just kind of dive into it. So a quick recap on sort of the basic theory. So actually I would recommend you probably have a little refresher of the very first video in this module called, I believe it's called Basic Market Structure, right? And where we go over higher highs, higher lows, lower highs, lower lows, and strong and weak highs and lows, okay? So with swing structure, we're just going to focus on it here now, right? Because you should be very familiar with the concept that a bullish market is higher highs and higher lows, right? We target the weak structure. The weak highs are the highs that fail to take out the lows, right? And the strong lows are strong because they caused swing breaks of structure, right? After the swing break of structure, what do we expect? We expect that swing pullback, but we expect that it will not breach the strong low. So we're trading within this range. We expect price to pull down in towards the strong swing low, right? But because it's strong, the expectation is that it will hold. The expectation is that it's protected. And then the expectation is price will move to the upside and it will target those weak highs. Why is it weak? It's weak because it failed to take out the low, right? And that's the sort of the very, very basic theory of how we follow the trend, right? Obviously, in reality, we can get a lot more complex price action, right? Where you see a lot of highs and lows being broken. And, the whole idea is, how can we figure out where the true swing range is, the swing high and the swing low is, that we want to work within, okay? So when the swing trend is bullish, okay, when we get a break of the swing high and we get that bullish break of structure, for swing structure, we need a candle body close above the high, right? Above the swing high. We need to see price close above it. So with fractal structure, it can just be just a wick. So on fractal structure, the exact moment that price trades higher than the high by 0.1 pips, that is the fractal break of structure happening. And straight away at that exact moment, you can look for the nearest low, right? That's what we do with fractal structure. Swing structure is different because with swing structure, we want it to be significant. We want to see price close above the high. So you need to wait for the candle body on the time frame you're looking at. You need to see if it's going to close above, because sometimes it can move up and then it can spike back down. Okay, so you need to see a candle body close. Now, as soon as we get that, that is the swing breaker structure, which is what we call a boss. To find a swing low in a bullish market, a swing low is the lowest point that broke the swing high. Okay, so for fractal structure, what is it? We always find the nearest low, which would be here if this was fractal structure. But for swing structure, we need to find the lowest point, okay? Because with fractal structure, we want to be aggressive. With swing structure, we want to be a lot more conservative. So when we get that breaker structure and we want to go, okay, where is our new low? Because obviously at this point, right, we're trading between this high and this low, and price pulls back and it does its thing and it messes around. But once we get that bullish breaker structure and the swing trend continues to the upside, the low doesn't stay here. We need to find the new low. And the new low is the lowest point that broke the swing high. Okay, so when we look back, obviously we can see it's this low here. Okay, so a mechanical way to kind of find that, and sometimes it's a bit tricky, is in a bullish market, the new swing low is the lowest point between the two highs. Okay, so that's your high, that's the high where it breaks. So from where the high is printed to where it breaks, between those two orange circles, the new swing low, when that boss occurs, will be the lowest point between those two there, okay? So you could grab your box tool and you could draw it from the high across to where it breaks, right? And then drag it down. It would help if I had a different color box. There we go, right? So that gray box, in between there, where's the lowest point? And that can help you, okay? So after the high is printed to where it's broken, where's the lowest point? That's always gonna be your swing low, okay? So in a bullish market, finding the swing low is 100% mechanical. There's no if, buts or maybes, right? Once you've got your swing high and then where price breaks it and you get the candle body close, it's always the lowest point. Okay, so that is 100% mechanical. There's no discretion involved, okay? Now, once we have that breaker structure, obviously we then start to expect that swing pullback is going to kick in, okay? But we can't map out where that swing high is until we've had significant enough of a pullback. Once we start to see a large enough pullback, right, relative to the recent price action, that's when you can then mark out the high, okay? So as you can probably guess, this does require a little bit of discretion, okay, in what you define to be significant enough of a pullback to say, okay, that's a swing high, right? And the reason why that's important is because let's say you have your breaker structure here, right? So price comes up, it does its thing, and then we get that breaker structure here, right? Price could pull back like, a tiny bit, but I'm not going to mark that out as my swing high straight away, because if you do, then if price breaks that to the upside, is that really a swing pullback compared to the recent price action? It's not, is it? That's more of a fractal pullback or potentially an internal pullback, right? So that's why I don't mark out in a bullish market, right? In a bullish market, I do not map out or mark out my swing high with a nice gray circle like this until I've seen a significant of enough pullback relative to the recent price action, right? I want to see those clear and obvious big swings in the market, okay? So just to make that more clear, in a bullish market, basically everything is 100% mechanical with your swing structure, apart from, it's down to you to decide what you deem a significant enough of a pullback to map out where that high is, okay? But everything else is mechanical, because once you get that breaker structure, it's the lowest point between the high and where it's broken, which would be here, right? And that's, like I said, on 100% mechanical. You need to wait for a candle body close. Again, completely mechanical. But when price is moving to the upside, you might have a little bit of a pullback, right? But if price breaks that, I wouldn't classify that as a swing pullback relative to how big this pullback was, right? So I want to wait for that. And as soon as price kind of pulls back like this and you're seeing that deep pullback, okay, now I'll mark out my swing high with a nice pretty circle. I'll draw my swing high line across. And now I know that if price does break and close above here, that is a true swing breaker structure. And then obviously you can mark out your lowest point, and then, you'll know your new swing range, okay? But we'll go all over this on the price charts in a bit, and it will make a lot more sense. And then obviously the exact opposite for when the trend is bearish. So when we get that breaker structure, we expect this swing pullback, right? So at that exact moment that you get that breaker structure, we know where the high is. It's the highest point that broke the low, right? There's no if, buts, or maybes. It's always the highest point between those two lows, right? Where the low was printed, price falls back to where it's broken, you find the highest point, that's your new swing high, okay? When price starts to pull back, we only mark out with our pretty circle, right, where that new swing low is, only once we deem there to have been, a significant size pullback relative to the recent price action. So when we get that deep pullback, that's when I'll then circle this low and I go, okay, here's my low. I already know where the high is. And as price pulls back, we know that this is a strong high, right? Why is this a strong high? It's strong because it broke the low. It did its job. So we expect the swing pullback to pull back, but we expect it to not break the strong high, right? That's the expectation, okay? Let's clear this up a little bit. And then price does its thing, right? Chops around, and then eventually we get that continuation of the bearish swing trend where we get a break of that swing low, right? And we get the break here. We need to wait for a candle body close, remember? Now, at that moment that we get the break and the true swing boss below this low, we need to find out where is the new swing range. Where's our new swing high? Well, remember, a swing high is the highest point that broke the low, that broke the swing low, okay? So that should say highest. Okay, with a 1T obviously. And that's how we find it. So it's the same as this, as the bullish market, but just the exact opposite, okay? So when we get that break of structure, you wanna look back on where's the highest point. Again, you can use a box trick to draw your box from the swing low to the point of where it's broken and then drag it to the upside. And you wanna find the highest point in that box. And that's your new swing high, okay? So you can draw that on, as soon as you get that break of structure, straight away you can draw on your new swing high. You know exactly where it is in a bearish market. But we don't know where the swing low is. We can't map that on with our pretty gray circle, right? Until we have what we deem to be significant enough of a pullback, okay? And then once we do, we can map it on. We know that's our new range. Obviously, we expect price to pull back up, but not to break the strong high. Why is it strong high? It's strong because it took out the low. So it's strong structure. So it's protected. We expect price to pull up, but not break it. And then we get another boss and then exact same thing, right? Then we draw on a new swing structure. We know that's the highest point that broke this low after it was printed. Here's our new swing range, right? But we won't map out the swing low with our pretty circle, right? Until we've had what we deem to be significant enough of a swing pullback, because we don't want to be marking swing lows if it's just little, right? That's not going to be a swing boss, right? So we want to wait for the sizable pullback first. Okay, now I'll mark that on because if price comes down and breaks it, that's a lot more significant for it to be a swing break of structure. Okay, so again, to make it very, very clear, with swing structure, everything with this method is 100% mechanical, except in a bullish market, just defining what you deem to be significant enough pullback to mark out the high. That will require some discretion. At least at the time of recording, I use discretion personally. And then vice versa in a bearish market, the swing low, we only mark it on when we deem it to be significant enough of a pullback. Then we can draw on, okay, that's our swing low, right? Now, there are mechanical methods you can use. You can introduce, say, a pip rule, where you will wait for price to pull back, let's say 50 pips on a certain time frame for a certain pair, and you go, okay, when that's happened, we've done that. But I'll talk about this, potentially in another video, right? And you can use volatility-based things as well. But again, enough for this video. We'll leave it in there. But for now, we're just going to use a little bit of discretion, okay? And we can hop on the charts and go and map this out.